guys, good morning, welcome to the live session with Stocks Network Trading. My name is Dave, guys, my partner's Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. It's yes, we caught it. Hey, guys, 200 pips, please secure.
Hey guys, welcome to Stock Sniper Trading. Thank you for joining. My name is Ron, my partner is Dave. It's a lovely Monday morning, 11 a.m. Eastern, just after 11 a.m. Eastern. Sorry for being late here, guys. And the date is Monday, February 24th. So right there, this is the last trading week of the month of February, and next week we're going to move into March. So for all of our swing traders and investors who are out there on a higher time frame, please monitor your closing monthly candle, just like you would as if it is a 5-minute candle. Maybe mark down the range of February's month of volume. What was the high? What was the low for your specific security? Where did it close? What type of volume is it closing? Is it closing as a bullish engulfing candle? Is it a spin top, maybe with some indecision for the month of February? Or is it a bearish candle coming down and signifying that there's a lot of selling pressure to finish off the month of February? But we still have this entire week. Things can change, absolutely. We do have some news in the market this week. Earnings-wise, there's a large corporation by the name of NVIDIA that is reporting their earnings on Wednesday after hours. So that's midweek. That could dictate the way how the last few days and what constitutes the close of the month. Okay, so that's again higher time frame monthly, and then whatever trader you are, start bringing it down slowly with a top-down analysis. Go from monthly, go to your weekly, go to your daily, 4-hour, hourly, 30-minute, 15-minute, 5-minute, 3-minute, 1 minute, and figure out what time frame suits you, what style of trading suits you, what is your goal in trading, long term and short term, and also keep educating yourself as much as you can every single day. So I'd like to start today off with a quick little webinar. It's going to be what is S&P 500. So it's good to know what this index is. It's good to learn about this. Whether you trade it or not, it's still good knowledge to know what this is, because it's the biggest index in the entire world. It's the largest index in the United States, obviously, and what does it consist of? And we'll talk a little bit about that, guys. Okay, so and then we'll get into the charts and breaking things down. Okay, so guys, with that being said, thank you all for joining, and I am going to get started, and then we'll go over everything when we're done this. Okay, so I'm just going to hit the record real quick, and we're going to get started. If you guys have any questions about S&P 500, let me know, and we'll get through this, and we're going to learn something real quick here.
Recording in progress.
Okay, welcome guys. This is our quick little webinar on what is the S&P 500. So we're going to learn a little bit about this index. What is it? How is it weighted? What does it consist of? And we're going to learn a little bit more about this, guys. Okay, so this is how it looks on the chart, and then I'll come back to the charts in a little bit. But what we need to do is, number one, do any of you guys trade S&P 500? Are you guys familiar with this? Right over here, the S&P 500. Let me know a little bit about your understanding on this, and I'm going to continue talking here. So we're going to learn what is the S&P 500 right over here. We've got a little presentation prepared for you guys real quick, and let's just get into this. Okay, so what is the S&P 500? First off, the S&P 500 or Standard & Poor's 500. So if you've always wondered what does S&P stand for, it's Standard & Poor's 500. Is a stock market index based in the United States of America that measures the stock performance of 500 large companies listed on the stock exchanges in the entire United States. So what it does is it lists 500 in order from 1 to 500, the largest publicly traded companies in the entire United States. Okay, and in order from number 1 to 500, and it's like a ranking system, and they do its competition. So the 10th rank security wants to get to 9, wants to get to 8. So the way how that is, it's calculated by market cap, the market capitalization of that security, and then that's how it is weighted. Okay, so the weight of S&P 500 and NASDAQ are weighted differently than the Dow Jones and US 30. So every week we're going to break down different securities, and so you get to know the security you're trading. You get to know its behavior. You get to know what it consists of and things like that. And this will help you understand what you're trading at a higher level. Okay, so just at the basic level, S&P 500, 500 largest companies in the US. It is one of the most widely recognized benchmarks for the entire US stock market, and is often regarded as the leading indicator of the overall health of the US economy. So you know when you guys have indicators on your charts, leading indicators, like a EMA or the RSI indicator, what it's saying is that if you follow the S&P 500, it is like a leading indicator of the overall economic health of the USA. So if S&P 500 is doing really well and it's trading at all-time highs, that would correlate with a booming US economy. If S&P 500 is bearish and moving down, then there could be suggestions that the U.S. economy is not as great as we think it is. So it's a leading indicator, but obviously you got to use a little bit more. You got to get confirmations and things like that. Okay, so so what is the composition of the S&P 500? What is it composed of? So the S&P 500 comprises 500 publicly traded companies, which are selected based on various criteria. So there's a selection process. Not any corporation can just become and go into the S&P 500. There's a selection. So number one, what I was talking about was market cap, MC, market capitalization. So you'll see this if you select a security. For example, if you click on NVIDIA, it will tell you its share price, how much it's trading at, and it will also give you its market cap. How do we get the market cap? How do we determine these numbers? Where do they get these numbers from? So a market cap in its easiest sense is you add up how many outstanding shares there is on the market and you multiply it by the share price. So if there's 10 outstanding shares out in the market, and the price is $2, you multiply 10 by 2 and you get $20 $20 market cap of that security. That was just an example, guys, but we're talking about billions and trillions of market cap with some of these securities listed in this index. So the market cap. So companies must have a market cap of at least 8.2 billion. So that is a minimum that can change over time as the market evolves. So there's a minimum. In order to even try to list on S&P 500, that you have to have of your company, corporation, you have to have a minimum of 8.2 billion market cap in order to list. So we're talking, these are fairly large companies. Okay, liquidity. Stocks must have sufficient trading volume and be readily tradable. So S&P 500, guys, I don't think you guys should have any issues with liquidity because there is a lot, trillions of volume flowing through S&P. So there's a lot of liquidity available to all traders at all specific time frames. So we don't have to worry about liquidity issues as with smaller securities. Okay, and then the US dominance. So companies must be based in United States. Okay, so this is a US index. You understand now, indices can be traded around the world. So DAX, German 3040, is a German index. That's giving us the overall health of the entire German economy. In DAX, you'll see companies such as Volkswagen, Porsche, BMW, Mercedes, like any German product is in DAX. If you're trading the FTSE, the FTSE, that's the UK index. It's comprised of British companies, and it gives us an overall health of the British economy. Okay, so and Japan has their own, China has their own, Toronto has their own. The Toronto Stock Exchange is more of a junior exchange, but everything has for each big nation has their own markets. Okay. So what is the composition of S&P 500 continued listing? Companies must be listed on either the New York Stock Exchange or NASDAQ. Okay, so they're going to be listed on either one of these exchanges. Sector representation. The index aims to provide a representative cross-section of various sectors of the economy, including technology. Okay, so your tech sector includes your NVIDIAs. It includes all of your tech securities will be listed in healthcare, finance, consumer goods, energy, and others. Some of the most well-known companies in the S&P 500 include technology giants like Apple, Microsoft, Alphabet, known as Google, as well as other major firms like Amazon. Berkshire Hathaway had their earnings this morning, and Johnson & Johnson. Okay, so and we call the Magnificent Seven, the top seven, are called the Magnificent Seven. Years ago, it used to be called FANG. That was Facebook, Apple, Amazon, Netflix, so those, and Google. Those were the FANG securities. Now we have what is known as the top seven, the Magnificent Seven. So that's the top ranking from 1 to 7. Those are your securities that are NVIDIA, Tesla, Apple, Amazon, Microsoft, Google. Those are the top 7. And the top 7 basically control the entire S&P 500. So the other, there's 493 other securities in there, but they kind of follow the top 7 because they've got so large in nature that they kind of control this entire security here. So and some of you guys are very familiar with all of these names over here. Okay, so the weighting methodology. The S&P 500 is weighted by market cap, as I stated, which means that companies with larger market values have a greater influence on the index's performance. Okay, so if you have a $4 trillion market cap and you're the leader, the S&P 500 will kind of follow the way how you're moving, the way how it's weighted. So how is the MC calculation? The market cap of a company is calculated by multiplying its stock price by the total number of outstanding shares, how I explained earlier. the index calculation. So the total market cap of all companies in the index is calculated, and each company's weight in the index is determined by the ratio of its market cap to the total market cap of all companies of the S&P 500. So you can see over here S&P holdings by weight. These are all of the companies. So you can see like over here we got Apple at like 8%, Microsoft 7%. You got Alphabet here at 2%, each Class A and Class C. You got Amazon 3%, Nvidia 3%, Tesla 2%, Meta, Berkshire Hathaway, United Health Group. So some of these names, and then you can start to see there is AMD in there is Disney in there is Netflix in there is Bank of America, there is Pfizer, there's Walmart, Cisco, McDonald's, MasterCard, Visa, Boeing, Exxon, and these other ones comprise 68% of the entire weight, but these big ones over here kind of control the entire index. And then there's adjustments. There's always adjustments that are made. The S&P 500 is regularly rebalanced. So they tend to do this on a quarterly basis every 3 months. So for example, if Intel over here is not performing and it doesn't meet requirements, or its market cap is falling, then they'll replace it. They'll take Intel out and they'll replace it with the next leading company. We've seen this before, like in NASDAQ, they replaced Moderna. They took out Moderna and they replaced it with Palantir and like Strategy. So this was just recently done. So they constantly are being rebalanced and reshuffled. So it's regularly rebalanced and adjusted for corporate actions like stock splits, dividends, and mergers. As the market cap of the individual companies change, their weights and index will also change. Okay. So let's just talk about the importance of the S&P 500 real quick right here. Market performance. The S&P 500 is often used as a key indicator of market performance and overall economic health in the U.S. Investors and analysts closely monitor its movements to gauge investor sentiment and economic trends. Number two, it's used as an investment vehicle. Many investment products, including index funds and ETFs, exchange-traded funds, aim to track the performance of the S&P 500, allowing investors to gain exposure to a diversified portfolio of large cap US companies without having to buy individual stocks. Traditionally, over the past 20-30 years, if you have just put your money and set it aside in the S&P 500, you have gained traditionally a 10% year-over-year return. Okay, so a lot of safe traders, investors for long term do enjoy to park their money in like the S&P 500. You got exposure to 500 largest corporations in the entire United States, specifically the top 7. You get a little bit of a piece of it, and traditionally it's year over year it's given a return of 10%. Okay, minus everything else, like you got to subtract inflation and interest rates and things like that. But it's been a safe place to put money and have it compound over time. Okay. So it's a great investment vehicle. Benchmarking. The S&P 500 serves as a benchmark for assessing the performance of mutual funds and individual portfolios. Fund managers often compare their returns to the S&P 500 to demonstrate their performance relative to the broader market. So you might see a lot of corporations now, they base their results against the S&P for benchmarking. So for example, some companies are trading, Nvidia's trading well above the S&P index, like 10%, the benchmark. They're maybe trading at 30, 40, 50% higher. So you can see how they're outperforming the S&P 500. So there's going to be some securities that stand out and performing much better than this index, or there's going to be also securities that are performing poorly and below this benchmark. So this is good to understand how well your individual security is doing against a benchmark. Okay. And then just real quick in conclusion, guys, the S&P 500 is a significant indicator of the U.S. stock market and economy, encompassing a diverse range of large cap companies that are selected based on strict criteria and weighted by market cap. By understanding the S&P 500, investors can better assess market conditions, track economic performance, and make informed investment decisions. Okay, and you can see over here, we do have a cycle, the bull and bear market cycles. You guys, if you've been trading for multiple years, you understand that these markets move up, they come down, they go sideways, they go back down, they go back up. So there is cycles that we go through in these markets. Some of you guys are too young to have experienced some of the market cycles in the 60s, 70s, 80s, and the 90s. And then we're going through cycles, guys, okay? So 1960, we had a bull cycle. We had a top come in right in 1970. Some of you guys were around. There was a lot of interest rates going on in the 70s. And then we had, it led a bear cycle coming where we bottomed into early 1980s. And then the market started to push back up, take out the 1970s high. There's our resistance. Break it out in the 90s. We had a lot of internet exposure here. There was a big movement, and we came and we made all-time highs in the early 2000s. Then unfortunately we had the dot-com bubbles kind of break the top. It pulled back. It was a scary time in early 2000s, but it didn't really come all the way and bottom out to the 80s. Okay, so it kind of corrected itself, just like the market the last few days is kind of potentially correcting itself. Nothing to be alarmed about. It's not the end of the world, but there could be healthy corrections in the markets, and we just have to understand that we're going through maybe a cycle on the higher time frames. On like this could be yearly analysis, and you can see that it bottomed out, it came back up. But remember, like in 2010 we had the financial crisis right here in 2007, 8, and 9, and you see how it was kind of coming up to retest this high of the early 2000s, and then it produced a lower high, just like a double top pattern. So if you really start to take your analysis on higher time frames, then you can maybe understand what investors start to look at. And then here, there is obviously liquidity below 2007, 8, 9's low. There's a lot of pending orders down there. There could be investors or traders that are scared, fear that the market is going to continue to drop, so they want to sell in here and cause more and more selling. Or there's buyers that are glad to buy in here. They're patiently waiting to buy that pullback from the early 2000s and get in at a better price, just like we do on the lower time frames, guys. And then it came back up, got rejected, took out the low, grabbed some liquidity, and we started to reverse back, coming back up in the 2012, 2015, 2018, and all of this. And then you guys see we peaked, we made a new all-time high, and in 2020, you guys know the story, COVID, lockdowns and all of that started to create a pullback. But we've continued to respect these highs, continue to find support, demand in the markets, and continue to take it to all-time highs where we are right now, guys. So let's go into the charts. Hopefully you guys learned something there with the S&P 500. Now what we're going to do is we're going to actually analyze the S&P 500 real quick. So I kind of gave a huge top-down analysis from the 1970s to where we are right now. But what I'm going to do is we're going to go now into look at the daily. So what do I see? I see S&P 500 making highs, higher lows, new highs, higher lows, where up here it kind of, that was the all-time high in December. And then we push back down. But you see we're getting good support built right over here, where it used to be a resistance right here, turned to support right here, stretching it, continuing to stretch it across into the future. I can see that they tested it a couple times, but got rejected, came back up. They closed it right here, but there was no significant move down. It just closed, maybe grabbed some liquidity, produced a higher low, and came back above this block. And if I continue with this block into the future, again, what I'm going to do is I'm going to make it green. Okay, so if we ever do come back down to retest this, we could have some support over here, or we could have a breakdown here where the market could start to really correct itself. Okay, so do we have any tops, any highs? Yep, we can see up here. This is our all-time high supply. Okay, you can now illustrate it with a supply box and again stretch it into the future. So are we going to come back up and retest this red box? Time will tell. Or we're going to continue, maybe pull back, lower high, and then they continue pushing it down. But right now, we came up here end of January, retested it, they pushed it down. We came up during the month of February, okay, right into here, and almost broke out, but we didn't get any kind of closing green volume to confirm any indication that we're going to continue move for new all-time highs. And pushing down. So Friday, you guys remember, it was a selling day. And look at, I always said, guys, did you follow your daily candle after the markets closed over the weekend? Did you do a little bit of analysis? Where did we close? We closed relatively to the low. So how do we open today? What are we doing? Did you acknowledge 50% of that large bearish candle on Friday? So if we're just looking around 50%, that's roughly 50% if I'm just eyeballing it right there. And then I look to see how it reacted with all of the price action to the left. Here we impulsively broke, closed right below it. Again, no volume close above. Here they pushed it up impulsively, but then the red candle closed below and continued push down. We had a couple instances where we had some volume close above here, but can see there was that one final liquidity grab continuing to push right back up into here. So now we closed, we're below 50%. So this is a point of interest for me on the daily right here. So this is my daily resistance. If the buyers continue to push it up like they did today, we got to kind of close above this yellow line to build off of it so that we can try and make our way back up to the all-time high supply. If not, the offers will start to get lowered into the market. Okay, so do we have another point of interest on the daily? Maybe right over here, like where we had this top right here, and then it came down. Here we can see volume close kind of above it, retested it, continue to move higher. Here it came up, rejected back down, closed above it, continue push up. Here were the liquidity grabs below it. So we tested it right around here last week. If I kind of want to get it more in line with maybe more recent price action, I can alter it myself. I can bring it right there to that body. Maybe if I want to get those two wicks in there. But generally, you want to keep it. And then if you don't know, you look at the number here, 5,995. So I'm very, very close to that psychological, 6,000 is right there. So maybe I just keep it at psychological 6,000. I'm still getting concrete evidence over here. So then now what I do is I follow the way how they closed it, the way how they opened it, and follow today's volume. Okay, so let's Friday, big selling day. We closed near the low. They gapped it up where we opened. They gapped the market up, and it was initially bullish when the market opened up. So that's our opening price. We came up. It was green, 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 where we made a high of a day at the high wick right there. Look at the number, guys. Please pay attention to the number too. It's very, very close, off by a point from 6,051, 6,050, that psychological area. And then you can see that 50% yellow marker. So what I can do now is I can figure out this zone right here, and this could be offers in the market that they're lowering from the all-time high supply. And then I want to see this week, will the S&P be able to on a daily break above this, retest this zone and go back up to here? If I'm measuring the move, if I go and I trade from here up to there, I measure the move, I see how many points it is, and then I justify my trading, just like I'm doing if I was scalping that zone. Same with on the daily, okay? That's your daily zone. And then what happened when we made that high of the day today? We'll figure out exactly what time it was when we go to lower time frames. It made the high of the day, got rejected, so sellers are present, they're there, and started to come down, started to reject all those early buyers. And it came down to look at relative to Friday's close. Okay, we broke the close, we broke the low. So it pushed a little further, and we also took out February 12th's low. We took out this big Monday, February 10 ignited bullish candle. We kind of took out this low. So we made a low of the day ourselves. So the S&P came all the way down here, made its low of the day. And buyers are present and they're rejecting that low of the day. They're bringing it right back up to virtually that yellow line. That's where we opened. Okay, so today's candle has 5.5 hours remaining in it, and it looks like it's a daily spin top. Okay, with sellers selling, buyers buying, volume right where it started. Okay, so this could flip and go back up a little bit green. Sellers could still step in here and drop it back down, but we might be trading the range of today's wick, like inside here. So it's good to know some levels. If it does come back down to the low of the day, if sellers push it all and it breaks, where could it potentially go? Where's the next low? Where's the next critical area? So you can look for yourself to see which makes suitable sense for you for the time frame that you're trading. If I was to see it break and come down, I kind of look for maybe where I have some physical bodies in the market, where there could be a potential move, where I get some touches of wicks and things like that. So if it starts to come down here, we'll come back down and we'll start to chart down in here. But I just want to go a little quicker here. And then I look at the overall pattern. Okay, so this is where I stretch things to the left and I start to see what's going on in the market. What is the pattern? But we got a higher low, higher lows. We're above this green demand box. So buyers are still there. They're still there. They're still trying to push it back up. So we're not like in bear territory yet. The market would reverse like down into here possibly. This is where I would be considering the market could turn bearish down if it breaks through here, retest this, and then we take out those lows and start dropping down in here. That's where I would be maybe a little bit concerned down in here. So if we push down there and then retest this, then we take out these lows, that's where potentially you could have a reversal in the market and then start a actual bear cycle. Okay, so we're not there yet, but it is a pullback. You can see, yeah, Friday was a big red candle, but we still have support coming back up. Okay, so let's go to the hour real quick. Hour has nice technical formations where we came down, rotated right back up, lower high. We came down here Friday. When did it all start? Wall Street, 9 a.m. and just continued. Whether we had a little bit of a pause, like right in here. So if I'm looking for hourly support areas turn to resistance, I would definitely have a white line or a zone placed right in between here. There it kind of held a little bit of support right there. Like I would maybe put it right there. So you can see how it pivoted back up off the white line. You can see when we closed below it right here, retested it, we still pushed down. Then it started that next leg down. Again, we pulled back up. And you can see we're below the big red box. We're below, continuing to stay below. And then when did they flush it back down? To this morning, Wall Street, big red candle where we kind of bottomed out low of the day at 10 a.m. and then we started to come up with this really, really nice bullish engulfing 11 a.m. candle that's going to close in approximately 25 minutes, and we could be coming back to retest our opening price. Remember that yellow line was my daily point of interest. So let's pay attention. If we can get hourly volume to maybe push above that yellow daily point, maybe retest it and hold, then maybe we're going to make our way start coming up to here. Okay. Do we have any maybe specific areas on the hourly I can look at in case we do reverse this afternoon and we are coming up? Well, then I start to look at my hourly structure. Where could I potentially place a white line? I could place it right there. I could place it right there. I like to place it here. Why? Because I can see where the candle closed. I can see that candle come down, take the liquidity, and still close above that white line. Here I can see where it retested it. Didn't really break it until this candle. So if we are coming up, maybe we fill right up to there, then I got to understand that this white line could be resistance, and they could continue with a lower high and lower the offers and push it right back down. Okay. However, if we do break and we got good volume and we break above there, maybe we retest this, then we could maybe start to trade into this supply up here. But sellers could do the same thing where it's just rotating back up, and in here they could slam it back down, right? Because we're making lower highs and lower lows. You can see right here, lower low. Well, it started up here, lower high, lower low, pull back, lower high, new lower low, pull back, lower high, new lower low. So this could be another pullback, and then they continue with a new lower low. Okay, so traditionally in like waves, we've got this wave, that bearish leg. Here's the next wave that came back. Then we got wave 3, drop, wave 4. So this could be maybe the final wave 5. And this could be now the start of maybe like you see the liquidity, like that grab down there? Maybe it could be the start of one V bottom recovery, come back, trade into here, pull back. Sorry for all the lines. If you just follow this direction, pull back right into here, hold. Now I'm trading in my right shoulder. I got my inverted head. There's my left shoulder. And traditionally, this one has a high probability of breaking through here. And then we start the next bullish wave cycle. Wave 1, wave 2. This could be like kind of wave 3. Maybe take out the highs, pull back, wave 4. And then we get our big wave 5 coming through there. Okay, you guys understand what I mean by those wave cycles? We'll teach a little bit more about this with like Elliott waves and things like that. But if you got waves, you can kind of follow the wave, like when you're surfing in the ocean. Just follow those waves. If they're nice waves, you see those surfers in California enjoying them. But when there's choppy waves, you don't see them surfing. So same thing with the markets. If you see choppy waves, choppy volume, don't try and limit your trading because it's difficult to trade. When we have nice trading volume, try and follow the sequence of the moves to the best of your ability. Okay, so now with this hourly candle, is there anything that I can maybe figure out about this if I go to the lower time frames? Absolutely. I can see right here, hourly 2 tweezer bottom lows. Let's mark this up on our charts. It was significant at this time, Friday, right over here. This was 2 p.m. and power hour made those equal bottom lows, and that's what kind of started the next corrective wave coming right back up. But didn't really close with anything, kind of just traded above here, consolidated green, red, green, red, green, and then Wall Street said, we're dropping this thing. So they dropped it. So, and then you can see how this white line where it was tweezer bottom low support, it was resistance right there at 10 a.m. Now we've got volume above it on the hourly with 21 minutes to go. Can we maintain this green volume and stay above this white line? This might be hourly support being formed in the next little bit for you and I trading. If we can't keep this white line, then selling pressure could continue to come in and start to come down red and retest 6,000. That very critical point of interest on the daily. If we can't hold there, then where's our next hourly support? I would look at these two bodies right now that are being formed right there. If we lose this support here at 5,989, it's got a high probability it's going to come and try and take out the daily low and continue dropping. Okay, so we got to now follow this volume. See how it's trading right at this critical area on the white chart. So guys, do you want to do a little bit of 15-minute trading today? I want to show you guys something different where we can watch 15-minute candles where it's not, and then I can do some other charts with gold. I can do NASDAQ. I can continue charting, but we don't have to. We can look for some good opportunities on the 15 minutes. Let's do this. I don't think I've ever traded 15 minutes with you guys in a very, very, very long time. It's good to learn, guys. And then maybe judge the speed between 5 minutes, 3 minutes, 1 minute, and 15 minutes, and find what works best for you. Okay, this one, it's for me personally, it's a little slower than what I'm used to. Okay, I'm used to 60-second candles, 1 minute, 2 minutes. So I'm an aggressive scalper, but I can be a really disciplined trader and look at 15 minutes. It's just we got to do the same thing we're doing. Okay, so we have our levels on the 15 minutes. Okay, you can see kind of when they bottomed out right here, there were a lot of indecision. This was when I took that buy at that end of the day on Friday, held a little bit over the weekend and caught that gap up. Not much, but we found our bottom. Okay, you know when I said, guys, we're looking to find our daily bottom. We're trying to find where our wick is. It was there. Okay, and then they pushed it right back up, and we came right back down. Okay, so do we have now? Look at what we're following the 15 minutes. Let's follow this legs that we got, this leg pattern. Okay, so we got that nice drop. Okay, which started Wall Street. Okay, we kind of bottomed out over here, and now we're coming corrective phase back up. So you guys know this pattern. Maybe our neckline is somewhere around here, right near this yellow daily line. What could happen? Yeah, we could possibly break out a little further, but what if the sellers are there protecting that and pushing it back down? Now, we're holding this white hourly line right now. You see the retest, and we're still holding about 50% of that volume on that previous 15-minute candle. So still, it's a little bit bullish here. It could, if it doesn't hold, it wants to maybe come back down and test 6,000, the yellow line, and maybe perform a higher low there. If it can't, maybe we come down here to the white line, the hourly. We test this, maybe perform a higher low there. If it can't, then maybe we're going to come down and produce maybe a double bottom at the daily low, or maybe they grab the liquidity and then come back up, or we're continuing to move down. Okay, so we're looking where maybe if it pulls back, will it continue to drive through here? And we'll watch this. Okay, so number one, I just want you guys to visually understand that this yellow line is a very important line on the daily. It's a daily point of interest. So if I place a zone at that yellow line and I kind of match it with the volume right now in these 15-minute candles, maybe this is how we can manage it. Maybe if we say this entire zone is resistance, this red box, and we're going to say to us, let's watch and see in the next 3 minutes if this 15-minute candle can attempt to close above here, or will it close inside of it, the volume, or will it close below it? But this is where we're figuring out where our neckline is, this leg coming up, because this is where we might get some consolidation, and then it could continue driving back up, or sellers could reject it right here. So right now we have a really nice 15-minute move where it held. Look at how it was near the daily low. It didn't break today's daily low, so we got a higher high. It closed. Look at that 15-minute spin top candle, how it closed right at that hourly white line. We retested it. We continued to come up to that daily point of interest. They rejected it. Closed with relative good volume. I would be marking 50% of that 15-minute candle to continue with this momentum. It did pull back, but didn't come into 50% and continue to break that wick, drive, fill up the previous 15-minute highs, get to that hourly point of interest resistance and break it and close near the high. If I was looking at this 15-minute candle to figure out where's about 50% of it, somewhere right around here. And it's perfectly lined up with my hourly white line. So the 15-minute candle, just like I look on 5 minutes and 1 minute, it opened red, and came exactly right there to 50% and held the hourly support. And the 15-minute candle continued to drive where it created a new high, came up to here, right now, right up to that yellow daily point of interest, and it's getting rejected. So how will this volume close in the next 1 minute? Let's watch it together, guys.
Recording stopped.
Okay, so how, guys, did that help you with anything? The little S&P 500 quick little presentation, and now we're actually watching the S&P 500, what's going on. You learn a little bit about technicals as well. And we're going to watch this price action now. Okay, so what is the response by the buyers and the sellers now as this 15-minute candle is closing? So you see it did come up there, it did create that higher high, but remember, look what's behind us. We do have a lot of selling pressure behind us, pushing it down.
Recording in progress.
Okay, so we pushed down, and then now let's watch how this green volume will close. Okay, what type of candle will it be when it closes? Pay attention to this stuff. Okay, I'm glad we're doing 15 minutes where we can kind of slow it down. Maybe next chart I'll do with gold, we'll go a little bit faster. I'll show you guys how it looks on the 5 minutes. And maybe our final chart will go down to the 1 minutes. I'll give you a little bit of variety today. Okay, so we closed with moderate green volume, okay, inside here. So this candle to me is like a bullish pin bar, a bullish spin top. Okay, we can debate that, we can argue that, but just understand it opened right here. It was initially red, we retested, buyers held support, it came back up, we encountered some resistance, came back and closed with a little bit of green volume. So now let's look at the continuation of the next bar that just opened up. It opened up right here, very, very small wick, so it's basically an ignited bar, and we continue to push up green. So what we need, if you're in a buying position or you're looking to extend this this uptrend, you have to take out this high wick. Okay, you have to create a new high in the market. Otherwise, if this gets rejected and produces a lower high, in the depth of market, you're going to have offers rush in here to push this candle volume down. But right now, we'll see if it actually breaks. Okay, and then you're looking to break this high wick. Where my cursor is, 6,021. And guys, another thing, when you're learning S&P 500, because I know it's a different language, maybe some of you guys are compared to trading Forex and things like that. If you're trading the futures market, SPX and all that. Pips and ticks and points. That's the different language. Please guys learn the basics if you're considering trading these things. Understand the difference between a point and how many ticks it is. Okay, I'm going to ask you guys, if I move 1 point from 6,021 to 6,022, 1 point, how many ticks is that? Anybody know? And then while someone is answering that question, I'm going to ask you guys, did this candle make a new higher high? I can clearly see it didn't. Okay, that was the high, 6,021.3, and the previous high was 6,021.6. 4 ticks, Kat, you got it. Okay, 4 ticks. So just know, guys, if you're trading US 500 and you're trading the futures market, okay, 1 point right here, they're very easy. From 6,016 to 18, that's 2 points. Basic grade 1 math. Okay, and then if we want to figure out how many ticks that is, multiply it by 4. Every 1 point is 4 ticks. So if it moves 2 points, 8 ticks. If I move 3 points, 12 ticks. If I go 4 points, 16 ticks. And then if I do nice move, like a nice move, let's measure what is 5 points if we're trading this security. Let's start it at right here, this white line. So 007, James Bond, right here. So if I move up 5 points, it would take me to 12. Okay, see there? From 6,000, 007.7, 5 points takes me to 6,012.7. And then if I'm calculating that in ticks, okay, 5 points, multiply 4, that's a 20 tick move. Do you guys understand that? So like this candle, for example, if you kind of bought in here and it moved up 5, right there, kind of moved up 5, 6 points, you made 20 to 24 ticks. Okay, and then you can justify what you're trading, your micro lots, your contracts, minis, all of those things. Okay, so but you gotta understand this, guys. This is kind of basic level. You don't want to learn this after you lose money. You want to learn it now. So I suggest that if you're making a transition from forex markets to futures markets, you guys understand what you're trading basically. Okay, so we still have 10 minutes left on this candle. I'm going to continue to do some other charts with gold, and we'll watch how it builds a neckline. Okay, and we'll watch to see if it can break out of here. We're looking for volume to close above, maybe retest, continue. Also make note that there is some liquidity above here. Okay, there is pending orders. So also what we got to look for is fake outs in the market. The market is very smart, guys. They know where there's quite a bit of liquidity. So if they want to kind of reverse the market and they know that there's liquidity here, they might come up there, grab that liquidity, and then reject it back down, and then start to cause the next corrective wave going down. Okay, but if they know there's something up here and they want to come up and get it, they can absolutely come up here and get it. Okay, so again, this candle came right back up. It came with green volume, but did not again achieve a new higher high. And then they're pushing it right back down. So you can see how it trades relative to this area of supply. If this candle starts to come back down, close below here, we might follow a next leg coming down. Okay, so in the meantime, guys, while we're keeping this right over here, what I like to do is a gold chart for us. Okay, and then we'll come back to that. Let's do gold. Do you guys want me to do gold and do again 15 minutes, or would you guys like to see gold at a lower time frame? I'm going to start with a top down. I'm going to start with daily. What's guys? Do you want to keep 15 minutes today? Maybe see how 15-minute bars trade with gold and S&P. Okay, so this is gold on the daily. Relative large bullish move. Okay, so understand now what is the macro behind gold? Why is it moving like this? Like this is daily candles. It has been overbought for some time and it's continuing to drive. There's a lot of uncertainty going on around the world. This is seen as a safe haven. Okay, so whenever there's craziness around the world, a lot of investors, a lot of traders, a lot of retailers like you and I, maybe we park our money in gold, physical gold, and leave it there while everything cools down around the world. And we're making a little money with this because more institutions, more investors probably want some exposure to a physical asset as opposed to just holding a fiat currency in inflationary times. So we can talk about that all day, what's going on with this. But number one, what we got to do is understand this is the all-time high supply for gold, and we came in it to multiple days here, but you can see how the volume is kind of thinning out. It's a lot of indecision last week up here. So is the market going to continue to drive for new all-time highs, or are we going to start to maybe correct this phase? It's been very bullish, okay, and squeezed a lot of sellers because it's continuing to drive. So do we have an all-time high supply? Yes. Can I find maybe a daily demand zone? Yes, very clearly. Here was red. There's where I would flip it green right there. As soon as that bar closed above, I would have changed that zone, stretching it across, respecting this zone. I can see when it came in there, back out, held it here, higher low, continue drive. So have we came back and traded in this green box? No. So that's my first line of structural demand on the daily. For someone to say, Ron, gold is bearish, I don't agree with you. I'm sorry. It needs to have this red leg coming down here. And then I want to see what will happen in here. Will the buyers be here again to bring it back up? Or will the sellers actually physically close it below here? Then that could start a different conversation. Because if the buyers are coming in again, then now they're coming into maybe an area of supply if we flip that color. Then the sellers could have momentum to maybe start to sell it down. But every time they're selling it down, you're selling into blocks of demand. So you have to understand it could just be a corrective phase and we still have bullish demand zones, blocks below us. Like everywhere you look, there's a block. There's a block right there. Here's another block like in the market down into here. Holding. Like nothing has broken down structurally. So we have good base, we have good foundations, and you can start to see also if you follow the daily lows, like it's still nothing has broken down. If I'm looking at now a point of interest to start trading, number one, 50% of this candle on Tuesday, February 18, right there, about half of it, okay? I'm just eyeballing. Again, I can grab my Fibonacci tool and verify 100%, but I think that's where opening, close, half of it's right there. Then I look the next day. Look at how it reacted. Red, stopped right there. Went back up. Next day came down, did not attempt in here. Higher low, came back up. That's what created that new all-time high. Next day, red, again, right at that white line, 50% of that candle. The buyers were there. Pushed it right back up. Couldn't create anything, no follow through, no green volume closing strong. And then again today, if we follow now today's daily candle, so this is a yellow line, daily point of interest. Maybe I want to see sellers close it below this yellow line in order to push down to this green block, but buyers are still there. Higher low, still driving. If you draw a trend line, just from like this phase right here, we're still moving in an ascending motion. Okay, so nothing has really physically broken down here. So we're starting to get volume now, continuing to try and take out all of these wicks and the supply and create a new all-time high. So today's daily candle, let's just follow how this thing moved. We closed right here, Friday. They gapped it down. Right here was our opening price, 23.34.35 area. So that's a yellow line for me. That's my opening price. It was initially red, came down, still held. So let's look at our daily low, purple line, holding. Okay, so see how now this line is That could be what's holding the market up from, and then I see today's higher low. I see how it's still respecting the trend line. So we found some buyers today. We came back to where we opened and it flipped and continued green, 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 where we took out Friday's high and we took out the all-time high. So today we have created a new all-time high in the market on gold, right at 2,956 on this specific chart. Futures might have traded a little higher, okay? And we got rejected, pushed down, and this is our current volume right now. So we do have green volume. Will it come back up? So now on the lower time frames, what I would be looking at is maybe 29.49, 29.50. That was Friday's high. Will we fill right back up to here? So I place a yellow line up there, and then from where we are, 42 to 50, that's $8 move on gold. That's approximately 80 pips. If the buying volume continues just to fill right back up to that yellow line, it's approximately 70, 80 pips. Nice zone to be scalping. If it continues to break, we might have a new all-time high. If sellers continue to exhaust these buyers and come back down in here, it might flip red and then we start to walk down here. Okay, so we do have a daily candle, 5 hours to go. We still have some green volume in there, little indecision on both sides. Let's see in the hourly, break it down. Was there any significant moves at those times in the markets that we're familiar with? Look at this drop was Friday, 3 a.m. That was London. The retest right here, Friday, 10 a.m. retest, continuing push up. Again, the next retest was Sunday. This is futures market, 8 p.m. Sunday evening open, came down, retested there. There's your tweezer bottom lows, continue move back up. Then following 9 p.m. pull back over here, midnight, 1 a.m., continuing to drive. Then we had London market open up this morning, pull back, still holding, 5 a.m. There was our new all-time high right there at 9 a.m. And then Wall Street, they dropped it all the way back down. So you see the hourly volume. Do I see any hourly volume closing below this yellow line? I don't yet, okay? So if you're looking to look for an hourly position to short the market, I would wait or maybe place an alert at 29.34 and wait for your hourly candles to give you confirmation. Right now, we're following this big leg, 9 a.m. If I was looking at this 9 a.m. candle like I normally do, can I figure out where's 50% of that big red candle? Yeah, it's right there. Okay, so place a white line and then I look, not just 50% open close, right there's a relative half, but look at how it lines up exactly with 8 a.m. open, COMEX, the close of that candle right there, the body to body, and then I see the wicks there. Then I look across the chart, I see how it got rejected there exactly. I see how the volume closed below that white line and they dropped it. I see here how we held the volume above it and we retested it. So this is a very significant white line on the hourly, 29.46. So if we come right back up what we're doing, there's our resistance. Let's figure out if we're going to continue to push or if it gets rejected and push back down. Okay, so I'll get rid of this all-time high supply zone. We should know that we are trading in that zone right now. And then I want to show you guys how I identify like a zone or resistance. So I use my white line as the reference, and then I kind of look a little bit above it and below it. So I can look above it, I get that. See that green candle? I got it. See that wick? I got it. See that wick? I got it. See that wick? I got it. I don't want to make my zone all the way up to there because I kind of want to just get more inside here, make it more natural. Okay, do I get those wicks? Yes, I do. If I bring it across, look at, I get that volume right there. I bring it across. Okay, that's my resistance. If I want to make it now even with a same amount above and same below, I do the same thing. Just drop it below, same amount. And then I also confirm with my eyes. I got that wick right there. I got that wick right there. And what color do I do in the future? Well, it's not green. If the volume is trading right here, I make it still red. And I show that this is still selling pressure. The buyers have to get through here in order to make this green and then maybe continue to drive for a new all-time high. So this is really going to test this corrective move right now. What type of battle we get here? That's where it could come in, trade in here. It came down. It's coming back up. This is where it could push right back down. If it does, I'm locating 50% of this big green candle. Why? Because we got a new hourly open right now. It's the top of the hour. It's noon, 12 p.m. Eastern. That hourly candle just physically closed right now. Now I look at the hourly candle. It's an ignited bullish candle that came up green. There was no pullback, absolutely nothing this hour, okay? And came right back up, took out that high, and closed 99.9% right at the high. And look at how it opened. It didn't create a new higher high as of yet. You're telling me it can't just poke it, that high right there? Hasn't yet. Came down and maybe possibly going to go. But they've already set tweezer top highs right now. Like I'll show you. Right there. If you place a white line right there, watch and see if they'll break it or if it will come back down. Now, if it's coming down, have I located 50% of this green candle? I haven't yet. Let's use the Fibonacci for this one, just to show us that we don't have to do it just by guessing. Use your Fibonacci tool. From the low to the close, there's 0.5 exactly. So I can draw a white line exactly right at that 0.5. If I want my zone, there's my zone. The next line above, the next line below. You can now figure out your own little zone. It's green, and we stretch it into the future. We want to see if the hourly buyers, see how it's a little bit above and a little bit below the same point of interest. Okay, what I did with that red box. So give or take, if it comes to retest, are our buyers right there at 29.40, 62? Are they right there at 50%, 29.38.88? Or are they right at the bottom there at 29.39.06? Okay, so if we pull back, if we come down red, 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 maybe we hold this and then we start that next leg up. If we cannot hold this, then selling pressure will continue to drop. Okay, but you guys see how they've closed it right now. They did not allow this hourly candle to open, just like you're telling me it couldn't just open and just flash green. I don't believe that. I'm sorry, guys. I don't believe that. There's no way. All of this hourly volume for gold and it could not break just a pipette. Like, come on. I call bullshit on that. Okay, I'm sorry. If it offends the markets, I don't give a shit. I call bullshit on that. Okay, now it comes down and we're going to see if it can pick up some steam, get back and flip. And then if it flips, this is what I look at as a scalper. If the candle flips, I'm not looking for this thing to go all-time high. What I'm looking for is just to fill right up to there. And I judge it, whether I want to take that trade, I calculate it before I even take it. How many pips, points, ticks, all of that, depending on your security, what you're trading, just to fill this little imbalance right back up to there. It's 18.7 pips, okay, less than 20. So if I'm taking this trade, I'm not looking for 50 pips. My mind is not on 100. I'm not looking to, look for a home run here. I'm just looking to hit a single. If you guys watch baseball, I'm just looking to hit a single. Maybe like a sacrifice bunt just to get on base. And collecting 15, 20 pips, I'm on base. And then just look for maybe another single or double. And maybe once in a while, in baseball, bases loaded, they hit a grand slam. Okay, so sometimes if you're hitting singles and doubles as a scalper, 10 pips, 15 pips, they add up. But what happens if you're in this trade? You are looking for 15 to 20 pips, but all of a sudden you get a huge green bullish candle breaking through here. Yeah, I'm not gonna say I don't want 30, 40, 50, 70 pips. Absolutely, every trade I want the most I can get out of it. But for the particular time frame I'm trading, that's how I'm trading. Okay. And then you can see how it impulsively broke out so far and got rejected, and the volume is still below that white line. This is an hourly candle, so that was just an impulse break on an hourly. We still have 55 minutes to go. So if you're an hourly trader, you can trade hourly impulses all day if you want, but if you don't know what you're doing, see how they faked out and came back down. So if you're waiting for this bar to close, you got to wait 55 more minutes, okay? That's if you're an hourly trader. I'm not an hourly trader, so I got to go down to the 30 minutes. I don't trade 30 minutes, but I can if you guys want. I can see the 30-minute structure came down, coming back up, and you see how the 30-minute volume is failing to get above and close above that hourly resistance. So 30-minute candles is now figuring out where its neckline is, and it could potentially come back down. But you see, if it retraces back down, now I'm trading in the hourly demand where 30-minute buyers could start to bring it back up. If the 30-minute candle closes below here and retests that, you're still ahead of the hourly guy, because the hourly guy still is waiting 25 minutes for his bar to close. So you could get in a little early. For 15-minute traders, I think this is where we'll keep today's call, 15 minutes. They're nice candles. We can trade them. But it slows it down a little bit, okay? So you can see there's nothing wrong with slowing down time, okay? The rewind button. We don't need to fast forward everything right down to the seconds, okay? You can slow it down. We got 9 minutes to go on this. Let's see what happened. 9:30. This is a significant open. It opened. It just tapped in there. They dropped it, came back. That was Wall Street's market open. Again, it faked out the market. It just came up impulsively green. All those excited buyers got slammed down. Okay. Have we made like a 15-minute bottom? Yeah, relative close to this yellow line. Came down there, back up. Came down, back up. Broke, grab liquidity, and reversing this right now. Okay, but do you see now where the 15-minute volume is concentrated and how it's consolidating right here now? Okay, so this is where now our 15-minute consolidation is taking place. Okay, but we can still watch the structure, how it's trading in here. Here it came back up, went up, rejected, red. Came back in, respected the green box right at that hourly white line. Came back up, couldn't create a high, but we're barcoding. Green, red, green. Next candle, red, red, red. Again, right at that hourly white line. Higher low on the 15-minute, came right back and closed right here. That was 11:45. That's when I said noon opened, and it took a while for it to break out. It took a while. Why didn't it do it right when it opened up? So there's the fake out on the 15-minute bar, and we're pushing back down. So let's wait for this 15-minute candle to close in 7 minutes to maybe give us a little bit better understanding if we're going to come back and trade into here or if we're going to pull back one more time. Okay, so I'm just going to put these two side by side. We got gold and S&P 500 on the left, and we're on both of them. We're on the 15-minute time frame. Okay, guys, if you enjoyed what I just did on YouTube, kindly leave us a like. It does help me. Okay, if you like this stuff, the likes, then I know going into tomorrow's session how to base the call off of. Okay, if this didn't benefit you, the likes will tell me on the call. If there's not enough likes, then I don't need to come on YouTube anymore. You guys are the ones that determine whether Dave and I will be here. Do you guys want to learn this stuff or not important? To me, this can tell you a lot about the security of trading. It can teach you a lot about being disciplined. It can teach you how to be patient in the markets. And one of the biggest questions we get is, Ron, how do you determine if it's a fake out? How do you control taking impulse trades? Well, I don't know how to answer that, but the only answer I can give you is if you wait for a candle to physically close, you're getting confirmation now, concrete confirmation as to how high it went, how low it went, and where it closed relative to the open. Those are facts. If you wait for the candle bar to close, you get real facts from it. If you just enter prematurely before it closes, then anything can happen. It's fair game. It's fair game. You can get an impulse break and make some money, a breakout trading if it goes correctly. Yeah, there is breakout traders. I myself am a breakout trader, but I have the right mindset when I'm breakout trading. I know exactly what I'm looking for, and I don't deviate from that plan. And if you get caught in impulse, then you might be holding in drawdown. And then when you hold in drawdown, now a trader like myself who's not even in the market, I'm not emotionally attached to that trade. So I have no emotions. I'm still waiting for the bar to close. You now in drawdown, your human instincts kick in, and then now you start to emotionally get caught up in your trade. You might get scared when you get in drawdown because maybe you over leveraged. Maybe you took a larger position than you should have. And now you're panicking because you're in drawdown. And then that will dictate the way how you take your next trade. Then you might take your next trade on fear. You might take your next trade on being greedy, and things like that. So you got to learn how to control your emotions. The best way to control your emotions is wait for candles to close. At least if it closes, I know that I'm not 100% guaranteed to take a a winning trade just because I wait for it to close and I wait for a retest candle, because I've waited multiple times, even on the live calls with you. We waited, we saw it close, we bought the 50% pullback, and then it reversed on us. Okay, so that happens. But if you do this every single day, and you stick to one plan and you stay with the close principle, waiting for bodies close, looking for your retest, high probable setups, I guarantee you over time. Don't look at your results in one day. Don't look at the results in 1 week. Look at your results over 3 months. Like how big corporations in the S&P, Nvidia, have their earnings on Wednesday. They have it every 3 months. So they're reviewing every 3 months. Are you doing 3 months analysis on your trading and seeing how you're doing the past 3 months? Maybe you're doing extremely better than you were 3 months ago. So now learn from it. What are you doing better? How can you now make it even more better? What can you do to further your trading? If you are patient and you're disciplined and you're taking the proper setups and you're seeing in the last 3 months your trading increasing, now what's the next step? What do you need to work on? What's the next thing? Every single day, traders can work on something, including myself. Every day I'm looking at what can I do better than I did yesterday. That's how you can improve daily on trading. And you can do it in a humble way by continuing to learn as much as you can about these markets. Because the markets are going nowhere. There's going to be a lot of volatility and a lot of volume and a lot of liquidity trading in the next few years, guys. So now is the perfect time to start to learn this and position yourselves for the next years to come. Okay, so gold coming back down red. It's still consolidating. Again, we can scalp this area. Like if you want to scalp, like if you want to go, if like you want to trade inside here, I can see volume trading going up and down in this neutral box. If I want to trade in here, I can go, let's say, to the 3-minute candles. Okay, so these are your 3-minute bars, how they're trading in here. But I would measure this entire zone so you know if you're trading from in here, what it is, what to expect. It is a 28 pip zone, 28, just under 30 pips. Okay, so here, this candle, 3-minute candle closed above, it came in here, retested. For example, if I bought this wick or I bought up here and how it came right up to the top right there, I could be up 15 pips. And that's it. That trade is done. It did what it needed to do. It just filled that zone. And you can close the trade. 100% you can close it. You can close 80%. You can take your stop loss, go to break even if you like. But if it came with this leg coming back down, you would have got stopped out at break even. And then you would have learned from that. Why didn't I take some money out of the markets? Okay, because you wanted a bigger move. You wanted a bigger move. But the market is now, it's concentrated right in here. It's not allowing for bigger moves. Even these sellers, they want it to break down here. You don't think that they want it to break down there? They want to make more and more and more. But that leg coming down is all the market gave if you're trading this particular 3 minutes. Okay, and then it came back up and it didn't even come and retest the high up here. It made a lower high and they continue to push it down. It broke. Look at the wicks. 1 wick, 2 wicks, 3 wicks, and it's just barcoding on the 3 minutes. Green, red, green. This shit gets frustrating when you're trading this. Okay, so maybe this time frame is not for you. There's a 3-minute fake out. There's that candle that broke out. All those 3-minute buyers bought up there on impulse. The candle didn't close, and look where it closed right there, and then continued to push down. These guys were in drawdown. Now we come back, higher low. We got a big green candle forming. It's going to close in 30 seconds. Will this candle now start to physically close above this? I don't see a 3-minute bar closing above here yet. This might be the first one. And what I would be doing is looking at 50% of that closing volume on the 3 minutes, making note of it in case there's a pullback buy right there at 50% of that volume, and then holding and continuing to drive. If we lose this green volume down, okay, there's the close above. Look at now, just real quick, a lesson here. How did it close? Where did it close? Where's the wick? Okay, this, guys, what I always talk about. Okay, see how it closed right 100% at the high? There's no wick. So the momentum just carried forward onto the next 3-minute candle. See how it's bullish ignited and there was no pullback, nothing? Because it's just carrying this volume from this 3-minute candle into the next one. It opened ignited and there's still some bullish momentum that's trying desperately to take out this high up here. That last 3-minute high right there, right there. Okay, so let's just watch this. And what's above this wick? liquidity is above here. Okay, just watch on the 3 minutes. This is a quick little lesson. Okay, okay, see how it came up? Did we touch that wick yet? No. So technically, we got a lower high. So they push it down. But let's watch how this volume continues to build. We still have our opening ignited price. See how it came down? It just jumped right back up. It collected more pending orders in the depth of market. Now it filled up. There, it broke the previous high. So they've encountered some liquidity right now. Okay, remember there's pending orders up here. There's pending buy limits, buy stops. There's sell limits, sell stops. There's stop losses up here. Okay, who would have a stop loss up here? Sellers. If this leg that was selling down here, they placed maybe their stop loss above the previous high. That's sitting liquidity for the market. So the market came, got their liquidity, and then see how now it's reversing back down. Okay, so this candle hasn't closed yet, but that was to show you how they grab some liquidity in the markets. Okay, does that help, guys? See how they came? They produced a higher high. That's technically, it could continue to move this uptrend, but in the meantime, they grabbed some liquidity in order to create that higher high. But when they encountered that, there was a lot of pending orders that got triggered, and now they're moving the order down. Okay, so see how it's coming down? Will it come all the way back to approximately 50% right there? See how it's coming down, down, down? Are the buyers going to be right here? Look at Judge at the time of this candle to close, 43 seconds. And now we've naturally retraced all the way back here. So this is why I say, guys, a little patience. If you don't feel like always buying the highs, then look at now, you might get a pullback discount buy right around here, as opposed to buying the high. If you bought the high, you're in drawdown. So eliminate that. Stop buying high breakouts. Maybe wait for patient pullbacks. Okay, at least you can buy in here and save yourself that drawdown. Like if you measure, I'm just measuring from those guys that bought that high break. Okay, they're approximately down 18 to 20 pips in drawdown. Okay, so if I was just physically placing a buy right here, those traders that are on 20 pips of drawdown, now I could place a 20 pip stop loss down in there and I'm below structure. Just by waiting to buy on discount, I'm getting a better position than these guys got up here. But this could continue dropping down and then strike could come after my stop loss, so now I got to determine what I'm doing here. What am I going to base a trade off of a rejection and just go back up? Am I waiting for this 3 minute bar to close? All of these things, these are all questions, guys. Okay, so just want to stick with the 15 minutes. Okay, so 15-minute candles trading back down in here. Let's see what S&P 500 is doing. Okay, so S&P 500 now is making a possible move to the upside. Okay, so it's breaking now. It's not only breaking like these last 15-minute high wicks, it's also breaking that daily point of interest, that yellow line. So let's follow this volume and see what happens here. Are we going to get our first 15-minute candle volume maybe closing above this area, or are they just going to maybe come grab some liquidity and bring it back down? Okay, this is the problem now. A lot of traders don't want to wait 10, 11 minutes for a bar to close, but if you're waiting for a bar to close, that's the game that you have to play on your time frame. So that's why sometimes I look at the 5-minute candles. Like this 5-minute candle is closing in 30 seconds. This is the candle on the 5 minutes that consolidated in here, and we're breaking out. This might be the first 5-minute candle that closes above here. Okay, so let's just watch the close of this 5-minute candle, just so we can talk about closures and while we still monitor the 15-minute candle. Okay, so here's the close, and do you see now where is about 50%? It's if it retraces back down to this area where we had a wick, a wick, a wick, a wick. That was prior resistance. Now it could turn into, this could be an area of support in the market. Okay, but do you see how I flipped that red box to green? Because now I got a 5-minute bar that closed above. If I'm sticking on the 5-minute candles. Okay, so they kind of, again, we have a break. This is what I always look for too. Look at how it closed. Okay, close near the high. Look at the size of the wick. It's a small wick. Remember the firecracker. If you light like a firecracker, if it's got a short wick, it'll pop. Okay, if you have a firecracker in your hand. If it's a long wick like this, there's more exhaustion. Okay, so you'll get a candle that goes green, but it's filling up that wick, but didn't really pop because it's got to fill that exhaustion. Here you got a shorter wick, so it could definitely pop and then drive. You got to look to the left of the chart. Where's your resistance to the left? Okay, there, right there. This big red candle that pushed down, there's 50% right there, 6,031. So that's what I would see. If this thing can pop right up to about 50% right there, if it can't make it up there, then they'll probably push this thing down. Okay, so we'll watch on the 15. Okay, so the 15 is a nice bullish candle. This 15-minute volume is representing that 5-minute candle open that closed above, and it's trying to get higher. Okay, so you got now 8.5 minutes of still 15-minute volume forming. If you want to watch it on the 5s, you definitely can. It might retrace back down. It might retrace back down when the new 15-minute candle is opening, and then that might be a good opportunity to look to maybe buy a 15-minute bar. Okay, at least maybe we can see a pullback. We can see how high it went. It can give us a lot of information. I see a lot of you guys do like the 15-minute candles. I didn't know that. Okay, it's good to know. I can slow it down, and I can educate a little more, and it's not as fast. So Armand, for learning how the liquidity works, it helps a lot. Yeah, it does, Armand. When I learned it too, it was, I'm not going to say like game changing, but it helped me understand what is going on in the markets and then helped with my trading a lot when I started to understand what liquidity is. Not just understanding what liquidity is, but the psychology behind it. Why does the market want to come up here? Why does the market want to come up here, get this liquidity, and then maybe possibly go the opposite direction? And then I studied it and I studied it, and then I started to learn more about it, and now I understand why they do it. I understand. Like it's not a secret why they do it. They want us to not know what they're doing, but it's not a secret. Okay, let me do it this way. Okay, let's say you're outside. Everybody, picture them. You're outside. Okay, you're going to the grocery store. Okay, so you're walking to the grocery store, right? And you see a $20 bill on the ground. Okay, and it's on your way to go to the grocery store. You might see that $20 bill. You put it in your pocket, and then you turn the other direction. And then you go the other direction, but you're 20 bucks richer. You put that $20 in your pocket. Number one, if I saw some money on the street, I would look at it. I would see if there's anyone around to see maybe they're looking in their pockets. They lost $20 because I'm not a thief. I'm not. If I see there's an older lady and she lost $20, fell out of her purse, and I'm there, I will gladly pick it up off the ground and hand it to her and say, "Ma'am, did you lose your $20?" And she'll say, "Yes, dear, that's my $20," or she'll say no. Then I'll look for who else is looking for $20. If no one claims that money for 5 minutes, it's my money. Finders keepers, losers weepers. So the market, same shit. They come up here, they grab the liquidity, and they look to see what's going on. If no one's there, then they'll move it the opposite direction. So when they're keeping it there to look what's going on around, that's what's called consolidation. They're seeing more orders flowing into the market to see if more will come in and support that move or more will come in and reject that move. Okay, so it's kind of like a witness. If I did that at a grocery store, maybe you were walking by and you say, and I gave it to the older lady and you said, "Ron, that was very polite of you, very nice of you. Thank you for doing that." You were a witness there. So there's witnesses that come in the market. They're liquidity. There are other pending orders. If they support that move, they're going to come in and support that move. If they don't support that move, then they're going to be offers. They're going to reject that move and start to move it in the opposite direction. Okay, so if you saw me take that money and I took it and I said to the old lady, well, and I'm not giving it back to her, then you're going to say, Ron, you're an asshole. And that's welcome to the world of market making. Okay, so I'm not a friends with market makers. I know that they're pieces of shit. I know that they steal people's money. Okay, but that's why we need to educate ourselves as to what they're doing, witness what they're doing live in front of us, and learn from it. And either we accept their move or we reject their move. Okay. Lady Stone, you're looking for your money is in my pocket. No, I'm just joking. I would never do that, guys. Okay, so gold now is still consolidating. We got now let's pay attention to these 15 minutes now. Now it's time to pay attention because we're now, the shot clock is at 3.5 minutes. Okay, so we're at less than 3 minutes. We've been waiting for this entire 15-minute candle to close. Now let's really learn how it closes and where it closes. Okay, so I'm just going to zoom in just a little on both securities. Okay, so we can watch these closes. And also, when you're trading 15-minute candles, this is where you got to understand risk management because these candles are larger in volume. So it's not like trading a 1-minute candle or a 2-minute or a 3-minute because those are smaller candles. These are larger. So that when you go, the higher the time frame you go, the lower you risk, unless you have experience, because you might have to utilize a larger stop loss than you normally would. Okay, because you got to measure the structure of what they're forming. Okay, unless you're going to pinpoint an entry and hope to get it with zero drawdown, it's not easy to do in the market. Doesn't matter how great your technical skills are. If the market doesn't want to move in that direction, it doesn't want to move there. Okay. So now we got 2 minutes. Okay, so what can we state with the S&P 500? We have our first 15-minute bar that's breaking through. Remember this resistance? Okay. So it could definitely close above here and then pull back into our green zone. And then maybe we could potentially get maybe a pullback buy to continue to drive. However, if they reject this move back down, could start a red leg coming down. But we still now, we're noticing that we're building a depth of market. We got volume pushing on the 15 minutes above this daily yellow line. So it's looking good, but we can't be like naive to the fact that we're still pushing down. Okay, we got lower highs, and lower highs. This is a very nice move on the 15 minutes and a nice little counter buy off the bottom, but you got to still understand we do have lots of supply behind us. Okay, so they could definitely push this back down. So if I'm still bullish on what they're producing here, maybe I wait for a pullback buy down in here as opposed to just buying a high breakout that could go a few points up and then they do drop it down. So let's just see how the bar closes. It's going to close now in 45 seconds. Gold started to reverse back down red in here. Okay, so will it close red inside our consolidated box? That could show us that we could continue pushing back down. But we got a higher low, higher low, higher low building on gold. Okay, so keep that. Both of them look very similar with this leg that bottomed out and coming back in. Okay, so here's the close. Again, I always say pay attention to the last 30 seconds of every single candlestick that you trade on your particular time frame. If you're an hourly trader, follow the last 30 seconds. Right now we're looking at 15-minute candles, so let's see how they close it out this last 30 seconds. So we see we got 15-minute high resistance. It traded into, what did I say? Look to the left, 50% of that red bar to our left right there. Exactly. 50%. That doesn't surprise me that it got rejected there. And they pushed it down and we opened red ignited. So first thing is, if it comes down red, 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 I locate where's 50% of that 15-minute volume, like I do with any other candle. Okay. So notice how it opens. Okay, notice this, guys. Start to maybe pick up on a few clues. It closed right there. They gapped it up. There's a little gap in the market. And you see how it's red ignited, just started to fall. It didn't gap up and just flash green and go up green in order to take out the last wick. It opened red, ignited. So we got to respect the fact how it opened. It opened ignited red for a reason. I didn't open it up like this. You didn't. The market did. So we have to acknowledge and respect that. So when that candle bar opens red like that, with that momentum, we have to assume that it wants to sell down. Okay, but when it sells down, this is what I'm looking at. Will it have support right here? Will it have support right here? Or will it have support all the way down in here? Okay, so we came down a little bit and it's finding support. It came up, but you still see how it's still red ignited, and then they just came down with deeper volume. Okay, so they engulfed those buyers, okay, that bought right away when this candle opened. Now we're coming to test 50%. Okay, so let's see. There was an initial wick right there, but you see how this selling pressure is pushing down, trying to come lower and lower and lower. So it's difficult to understand, where do I buy? Did I buy right there? Do I buy right here? I judge the candle. Remember how it opened very bearish. So yes, we could buy, but we have to understand that if we buy, we got to come in, we got to take out all this red volume and flip this candle, and then we have a high wick above us. So not only do we have to push up this red volume, that takes a lot of work to do that. Then once we finally do that, when we catch our breath, we still have to go up this exhaustion mountain here, this wick. So in order to flip this, we got a lot of work to do for buyers. Like, they need to start to step up in this green box and start to come in here and start to build some momentum, because if they lose this selling pressure could continue to come right back down. So see how it came down? It broke a little bit below 50%. That's that notch above, little below. The buyers stepped in, and now we're getting a little bit of a reversal. But this is what we call a hanging man candle. So still has this red volume. Okay, it's a nice rejection so far. 12 minutes to go is a long time, and gold also could be rejecting and continue to push up here. Okay, so we got first support area right there in our green box. Nothing technically broke down. Okay, it's a natural pullback. Nothing to get alarmed about. Even if you're a buyer, nothing to get alarmed about. But what I would like to see is, will this candle flip? Can the buyers flip this candle? Because if they can't, selling pressure might still come in and come back down and take out this low and drop even further. Okay. So this is just our first 15-minute candle that closed with a little bit of volume above here. So sometimes it takes time for things to develop. And you guys know, just a reminder, Wednesday after hours, NVIDIA reports. Please, guys, pay attention to that earnings. If you want to follow a company, NVIDIA probably is a company you should put on your watch list, especially follow the earnings. Okay, they're one of the largest in tech, AI, all of that could control where the markets move in the next few months, in the next few years. Okay, so we got to understand what's going on over there. The market could be consolidating Monday, Tuesday, and Wednesday leading into that. Rob, you would draw fibs here from where? From the high to the low, or this low to the high move? What would you do? This leg or the entire move coming down? Are you talking about S&P or are you talking about gold? Gold. So the purple high of the day, high to low? Yep. Okay, so if you guys want to draw some fibs, yeah. From the high point, today's high, it's clearly right there. So I grabbed my Fibonacci tool, grabbed it. I'm swinging it down to the lowest point. Okay, so there was that high point. That's where I plotted it. I just clicked it right there. There's my low point. Now I just want to make sure that I have the right lines in here, because you can reverse it. Because if I was to go from swing low to swing high, I would have to adjust where my 618 is. So first pullback, discount, 23% off. Okay, and it continued to move right there. We're trading at 50% off. Okay, so there's our 618. Look at how my 618 is lined up, overlaps my hourly resistance in my red zone. So this kind of gives me confirmation that if I'm a seller, I would be looking to sell in here. I would be waiting for these buyers to come in here, and then that's where I'm positioning myself. I'm selling exactly at 50% of that big bear candle. I'm selling at hourly resistance, and I'm selling at the 618 retracement of this move right here. Okay, if it continues to break out, there's my daily point of interest, 29.50, and then there's a 786. But this is where I'll leave the fibs on. We'll also watch the fibs on gold as well to see. And this is 15-minute fibs. Okay, so to complement our 15-minute candle here. Okay, so now what's going on with S&P? See how now it flipped. Remember we opened red and it was ignited red and we pushed down. It was coming building and then they pushed us down. Now we actually have flipped the bar. Okay, so that's good. But remember what I was telling you. It's exhausting move to come and overtake the candle because you have all of that supply above you. So it takes a lot of effort, takes a lot of energy in order to flip the candle, which they did. So respect to the buyers, still respecting about 50% of that volume, and they flipped. But now their job is not done. We got to see, can they continue to drive up here and create a new higher high to extend this uptrend, or are the sellers stepping in and going to push this bar back down? Okay, so we have the halfway mark. Okay, so you know when I always say when we're trading 5-minute candles, we have 2.5 minutes to go. The first half is over. Let's watch the second half going into the close. Well, we have now 7.5 minutes to go into the close. So this is kind of the halfway point of this 15-minute bar. So I can already rewind what happened in my head. It opened ignited red, was strong at the beginning. Some of you guys forgot this already. And it came down red, and then there was initial flick. But then that red volume continued to push it down, which created the low. Then the buyers continued to push it up. Then it came down again. While I was describing the Fibonacci, I was still watching what was going on S&P over here. And then it officially flipped. But we've got a lower high. So what I want to see is, do we have enough momentum and volume to take out that high? Because if we fail, then we have a failed higher high break. We got a lower high. Sellers could step in and start to push this move down. Okay, so we got to figure out how this candle will close. And maybe can we build off of it? Can we look for buys, or are we going to look for sells? Look at gold. Gold, again, impulsively broke out, and then they pushed it right back down. Okay, so you see how things are consolidating. It's exactly right at 0.5 of our Fibonacci. Okay, and we got now a bullish pin bar, maybe a hammer candle forming on the 15 minutes. So we could continue to push and take out this high. And then above the high, you guys know that there's liquidity up there. Okay, there's pending orders. Does the market want to come and grab some more liquidity? Then maybe pull it back down, or are we just, this is a real bullish move and we're going to start to continue to drive through here. Okay, so 5 more minutes to go. And then when you're trading a 15-minute candle, pay attention to your 15-minute opens. Make sure you have, like, you know, at the top of the hour, a new 15-minute bar opens. 12:15, a new 15. 12:30, 12:45, a new 15-minute bar opens. So in the next 5 minutes will be 12:45, and we're going to get a new 15-minute candle that opens. So see, had we started the call a little earlier and we were prepared, maybe a potential buy off the bottom. But if we haven't, I haven't personally. So again, I'm reluctant to buy the highs unless buyers can show me some good strength. Otherwise, I'm going to wait patiently to maybe buy a pullback or maybe sell a leg down. So I got to continue to wait it out. Sometimes we get really good trading volume at this time of the day. Sometimes you get really choppy volume. I don't necessarily complain about the volume. The market will do what it wants to do. I don't have the power to change that. All I can do is I can change the way how I trade relative to the volume. This is not bad volume. Okay, and this 15-minute candle is going to close very soon. We have 3 minutes and 45 seconds to go. Do you see how much slower it slows it down compared to 5 minutes and 3 minutes and 2 minutes and 1 minutes? So these are a good time frame. You know, if you're more of a patient, disciplined trader, I recommend looking at 15-minute candles. Okay, so look at the move. Strong, coming back up. It officially took out that high, okay? So 3 minutes now. Will it push a little higher? Will it get rejected and come back down? Okay, and then physically look at the wicks. Is it an equal high? Is it a new higher high? All of those things. I pay attention to all of these little details. Okay, someone says, "Ron, you're too deep." I say, "No." I say, "You're not looking into it. You got to really get in there." Okay, so I can see above there. Yes, it did just poke it out a bit. So technically, we do have a higher high in the market. That can technically change the depth of market. Then, if there's a new higher high in the market, what do you think is going on below us in the depth of market? There's probably more and more bids lifting, coming up higher, because they want to get in on a pullback. So you're creating the depth of market below us when every successive new high. If it fails and makes a lower high and push down, what do you think you're doing to the offers above you? You're lowering those offers down because they want to get in for a sell, but at a premium. Okay. Lady Stone, you're done for the day. Daily goal. Unbelievable. Good job. Good job, guys. You went to work, Lady Stone. You did what you had to do. You got your daily goal. Now it's time to clock out and go home. Go home and enjoy the rest of the day. Good day at work. That's the way, guys. You got to see these markets. We're going to work every day. You come in prepared to work. You do your analysis. You do your charting. You look at the news. You follow your trading plan. You trade with proper risk management. You try to hit a daily goal, a realistic daily goal. I know everybody wants to drive a Lamborghini here and things like that, but realistic daily goals. Let's strive to maybe look to replace your income so that you have supplemental income, and then it's great. Having an income and trading with another supplemental income, life gets good. You know, you got more money coming in, another stream of revenue. Perfect. If you do decide to do this and in the future and not go to work at your other work, that's fine. That's your decision, but I don't recommend that. I recommend just coming in, doing what you got to do in the markets, get out and go do what you got to do. And just stay disciplined like that. I know maybe you hit your daily goal and you want to go back in the markets because you can make more, but you can also lose what you just earned real fast. So I look at it like that. Every single day when I hit my daily goal, my brain is telling me, "Run, you can go right back in and make some more. You can make some more. You can make some more." I've heard that in my head for the past 20 years. But every time I listened to that, I gave back what I just earned. And then I had to listen to that other things tell me, "Oh, Ron, why did you do that? Why, this stupid move," and then revenge trading. And then before I know it, I'm in that vicious cycle again. I just lost today's goal and I gave back last week's profit. And now I'm screwed up my entire day and now I'm pissed off. So welcome to the world of trading. But you got to learn how to psychologically take care of those urges. Okay, you got to be. That's why discipline. Hit your daily goal and get out of here. Get out of the markets. If you have that urge and you, like we talked about this on another call, if you got the rhythm, market is moving in your favor, okay, and you hit your daily goal, okay, there's rules how to handle that situation too. Okay, if you've hit a little bit above your daily goal, then secure your daily goal and just trade with what's left. And then if you lose that, then call it a day. So like if your goal is 1% and today you hit 1.3, okay, you can still trade if you like. I don't advise it. I would walk out of the markets. But if you don't have discipline, at least do this. Then secure that 1% no matter what. And just trade with that 0.3. That's your buffer. That's like house money. That's the way I look at it. It's like house money. It's free money. Okay. So just trade with that and see if you can work with that. See if you can compound that 0.3 to 0.5% to maybe you can double it 0.6 and just scale off of that and continue moving that way. Okay. So now, guys, we got a critical bar in the market. It's 1245. Look at what they did here. Okay, so just pay attention here. See how they closed it? Okay, right there. It was, and they gapped it up. Look at what they gapped up, guys. Look at this. Okay, closed here. They gapped it up where they took out the previous high. Why? Because there's liquidity up there. So they naturally just manipulated the market to come up here and open up at 6,030. Bearish, engulfing, like ignited, pushing red, red, red right into approximately 50% of that volume right there, of that previous 15-minute candle. So now it's coming down. Can we hold? Again, look at the job that the buyers have to do. They have to now flip this entire red candle that they gapped up and manipulated that move and bringing it down. So it's filled that gap. You can see the gap. It's filled now. So will the buyers step in here? Will they bring it back up? Or is this going to be a bearish engulfing candle starting maybe a move coming down? Rob, every trader knows those voices in your head. I think it's just humans. It's not traders. It's just humans. You know, it's the human emotions that every day, you don't even have to be trading. Like there's fear and greed in everything in everyday life. Okay. That's something outside of trading that needs to be dealt with. But when you learn how to deal with it, then you're going to see your trading is going to get much better. It's going to get much better. And then understand, this is another thing. Trading is a long game. It's a long game. This is a game that might take years, multiple years, 10 years, 15, 20 years. It's a long game. Think long term. Don't just think for today or tomorrow. Think long term, and you got to start somewhere. Okay, look at gold, guys. Rejected, rejected. Okay, so pay attention to gold as well. We're starting to get rejections up here. Are they going to start to push this thing down? Okay. Do we have some structure in the markets? Yeah, there's this little trend. We're coming up here on the hourly, but it might not hold any longer. We'll see if it breaks. Still bullish, like this. Nothing has broke down yet. Still watching this ignited, gapped up red candle, how it came down, retested. Coming back up, will it flip and go a little higher? Or is the selling pressure going to start to maybe possibly push this market down? And remember, if you're trading futures, guys, with this, ticks. Ticks, not pips. 1 point is 4 ticks. Easy. So quick math, guys. If we are at 6,022 and we are trading now at 6,028, how many points is that? From 22 to 28, how many points is it? Point system. 22 to 28. I know it might be a pretty basic question, but someone learning this probably has no idea. And that's 24 ticks. Okay, so points, when we're talking points, from 22 to 28, 6 points. But multiply 6 by 4, 4 ticks in a point, and then we get 24 ticks. So perfect, yeah. Okay, so this candle, still, the way how it opened was very bearish. Remember now too, okay, so we're leading now into an hourly candle. So it's 12:50 p.m. Eastern right now. In approximately 9 more minutes, we're going to have a new hourly candle open up at 1 p.m. Okay, so let's just talk about what's going on with gold. So we've got rejected, rejected, rejected. Next hour maybe might be bearish momentum coming in, and maybe gold will start to push down. Maybe we still have good closure. Next hour might be another leg coming up bullish on gold. With S&P 500 over here, we got this bullish leg that's coming up, but did they kind of stop it right here at 6,030, and they're going to maybe take the next leg down in the next hour? Or is this just going to continue to drive bullish? So also time of day is very, very important to traders at all time frames. So make sure you pay particular attention at the hourly, okay? Whether you're trading 1 minute, 3 minutes, 5 minutes, 15, or you're an hourly trader. It's good time to pay attention to see if there's any clues as to what they do, or maybe the market. Like if we're looking at phases, like you see where kind of, or waves, where kind of it came down over here. This wave came back up. This wave came back down. This wave is coming back up. But what happens if that's kind of the maximum move up here and then they drop it back down? Okay, but as it's coming down, we'll see, maybe it's got to go through this green block in order to come down. Might hold there, and then that's could be an opportunity for a nice pullback buy if the green box holds. If it cannot hold, then yes, the market could continue dropping further down into here. And gold, again, came up again. Now, pay attention to those highs, like those wicks there. Okay, so you can see there's a lot of resistance up here at 29.44, just under 29.45. Every time it comes up here, push down. Comes up again, push down. Here it broke out a little higher, but they pushed it down. We just came in here again, and they pushed it right back down. So there's 4 solid rejections up there. And it's below 618, it's below that hourly resistance, it's below that supply zone. So are they lowering the offers down going into the top of the hour, the next hour? If we lose this trend line and lose that support right there, 29.42, we could see gold drop down to 29.40, possibly 29.39. That could be a 20 to 30 pip move, pushing down, coming down into the green zone. However, the green zone doesn't hold and we're breaking down, then we drop down to maybe here. Okay, but let's see how, again, it closes in the next 6 minutes. Can we see EMA, please? Yeah, Patrick, which security? Gold, S&P? I'll do it on both. Let's do it on both. Gold, 9 EMA. That's what I have right here. 9 is right over here. So we are above the 9 EMA, Patrick, on the 15 minutes, which is still showing bullish momentum. Every time we come down there, it's respecting the 9 EMA, but we're not getting good follow through on volume up here. If we add the 200 on our charts, 200 EMA, below here. So we are above the 9, we're above the 200 to suggest still bullish. This leg, okay, but not the overall. Still producing lower high. There's the big drop. Okay, red candle now. You see how they gapped it up. Maybe now it's coming down. Will it take out that low? How far down into the green box? 5 more minutes to go. Let's pay attention to that. I can add the EMAs on S&P too. So I add them after I've done my analysis, Patrick. Any indicator for that fact, I add them to see how it is lined up with my information. Okay, so I can see the 9 EMA. Look at where it is. The 9 EMA is 50% of the green box right there, where I normally look at 50%. So if it comes down red, 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 I'd like to see, will it respect the 9 EMA? Will it respect 50% of that and find our buyers to reject it, come back up? If we lose this, then the volume might be below the 9 EMA and maybe we push down. Relative to where the 200 EMA is, all the way up here. Do you see it? The purple line up here? So it's at my daily point of interest and still above that big supply box. So That's if you guys use EMAs. Okay, and then we got 4 minutes to go into the close. And let's watch this close over here. Everyone was asking me, Ron, why did the market kind of correct itself on Friday? Why did we have that? I kind of put the pieces of the puzzle the last few weeks. Amazon had earnings a while back. They kind of suggested that things are slowing down for Amazon, so that's kind of alarm bells. Walmart was big indication, leading indicator leading into. They suggested in forward guidance, inflation is gonna hit them. If there's tariffs, that's gonna hit them. They see consumer spending reduce significantly. So that was kind of a hint to the markets that Walmart, one of the retail giants, is saying and giving guidance that consumer spending is a little slow. We had the consumer sentiment report last week, which came in really low. Okay, so consumers since last month, this month, their confidence is getting lower. So if you add up all these pieces of the puzzle together, okay, that's why maybe there was a push down on Friday. And then there was hints of interest rates coming back into play. So imagine the market is pulling back like this, and then you hike up interest rates. That could start potentially lots of selling pressure in the markets. Okay, so we've got a lot going on, and we're leading into Nvidia's earnings Wednesday, which could give us good indication of what's going on in the tech sector. And also Home Depot reports this week as well. Home Depot. It's like one of those retailers, kind of like Walmart. Home Depot is more for your do-it-yourselfers at home. It's for contractors. It's for building supplies. Could tell us again an indication of consumers. Are they renovating their homes, or maybe they're holding off on renovations because the cost of groceries is high right now. So you guys understand how you learn what's going on the streets. The streets are what teaches you everything in the markets. Okay, when you learn what's going on in the streets, you can come into the markets and start to trade. But go out, go to your local grocery store, figure out what's going on. Go to Walmart tonight. After this call, go to Walmart. Talk to the employees. Say, how is things going? Is it as busy as it was last week? They'll tell you. They'll say, Ron, it's been dead here. It's been ghost town. There's been no one in here. That kind of gives you, there's no better leading indicator than to network and talk with people. I go to Home Depot all the time. Sometimes I just go there to talk. I'm one of those old guys that just goes in there and talking. I don't buy anything. I'm just talking. You get a lot of going to your local bank and see, is it busy? Is it not as busy? Things like that. Okay, here we go into the close. So we got a lot of rejections on gold up here. Okay, failed rejections. That candle that closed with green, do you consider it a strong candle? No, it got rejected. Volume closed below. Again, the buyers brought it up, but they're getting pushed down. I look at it as like there's a big bully up there. There's a big bully pushing it down. Okay, and they've showed me 1 time, 2 times, 3 times, 4 times. Not once, twice, 3 times, 4 times. And now let's see how we close. Will it close? Patrick told me to throw the 9 EMA on. We got the 9 EMA. Will it close relative right at the 9 EMA? Below it? We're right at the trend line. Will it retest this and drop? We're going into the hour in 10 seconds. We got a big, massive bearish engulfing candle coming down on S&P. Okay, so now things are shaping up. Things are developing here. So let's just follow going into this new 15-minute candle. So it did close below there. Okay, so this is resistance now. It opened ignited red. So it could definitely come down and take it. How many wicks do we have down here? I know it's a lot of lines I'm going to draw, but I just want you guys to visually see right there. There's a wick, and a wick right there. And the 9 EMA. So will they break below this? Will it cause a new lower low in the market? Or are buyers still going to step in and hold this move from breaking down? What about NASDAQ? We can get to NASDAQ. Did this chart freeze? What's going on over here? I think this chart froze, guys. Yeah, we'll wait for it to kick back in. Capital Com froze here. Okay, so good response by the buyers. Okay, it came in there. Did it break any structure down in here? Not yet. So they're still pulling it up. This is where now you have to ask yourself, you have 13, 14 minutes still left on this candle, lots of time. Do you want to just go in with the buy right now? Again, if you do that, you are trading on impulse. I have to state the facts. You're trading on impulse. That candle has not closed. I know it's 13 minutes, and some of you guys will say, Ron, look at how it retested perfect. Let's go in. Okay, but you got rejected multiple times here. 1, 2, 3, 4. This is another fifth rejection here. I'm not sure what happened with the chart of S&P here, guys. Oh, shit. Let me see if I got another one. Okay, we got one, but we lose our analysis. But anyways, I can figure this out. Until we get our next chart back. And then if you want, even 15-minute traders, you're welcome to go to the lower time frame. You're welcome to go to 5 minutes. And like if you want to enter on a 5-minute confirm, but then your bias is you got to judge your stop loss and your TP on a 15-minute. You're just trying to get in a little earlier before that 15-minute candle closes. Okay. See how this 5-minute candle has less than 2 minutes on it. So if this one kind of closes above and retests, you can maybe buy, but then you flip to the 15, you're still holding for the entirety of that 15-minute candle, and then you can base your stop loss and TP off of it if you want to get in earlier with some type of confirmation before waiting for that 15-minute bar to close. Otherwise, try and wait patiently for this candle to close. You're going to get some clues. Okay, it came down here, it came back up, they pushed it back down. Just want to see if my chart came back here. Okay, it's back. Good. Sorry, sometimes guys, charts freeze, brokers freeze. Okay, but it's back. Okay, so let's just go back to what happened here. Okay, so it was red, 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 came down, closed right there. The chart froze. I don't know if it just opened now and then to see that gap. I don't know how this candle opened or closed because of the freeze in the market. But anyways, it gapped down. They came back up green. So we are trading below here. They filled that gap and got rejected. So now it is a bearish candle, but you have to understand that, remember, we have this zone green for a specific reason. So we do see it trading red down into here, but it could just come down red again in a green zone and pick up buyers and come back up. So sometimes I'd like to see, is this red candle going to come all the way down and close below here? And then that could give me a pullback sell, or is this just going to come down a little lower, get a higher low and come right back up? And then we make our way back up. Gold, very nice answer right there. So sometimes 5 minutes, like right here, see how that candle closed above? It didn't take out any of these 5-minute highs. Naturally, it's coming down red. Will it continue to hold and break here and then drive? I might be considering maybe a potential buy here if this can still hold up and maybe flip, because then got a high probability we can take out these high wicks and continue to drive into this red supply. And maybe we can watch it on the 15 minutes. and hold on the 15. Okay, so you see how maybe it's potentially breaking. I see the candle close green. I see it pulled back, and then now it's coming trading back at that high. But it still is kind of like this doji type of candle. Okay, now it's turning. Now it's either you buy the break or you wait for it to come back down red and then you buy again if it pulls back. Okay, so you see now how it's coming down. See if that body flipped red. Now it flipped red. So now if I was trying to buy the high, I could buy right now. I'm getting a little bit cheaper than what it was just trading at like 10 seconds ago. But if I don't feel confident still, like if you still feel there's some indecision, then maybe you hold off. Then if you hold off, maybe then what you do is you just go back to your regular 15-minute time frame and just look at the higher time frame. Rejection, 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 rejection. Should I maybe wait and get good confirmation off this candle? Again, if you want to go down lower time frame, you absolutely can do that. You can go in. This is that 5-minute candle. It's still building. It could potentially break out, but there's ways how you can go down to any time frame that you like to get in. But then if you were to buy on that 5-minute candle, then again you come back to your 15-minute, and that's where your 15-minute support is. So even if you bought up there, you gotta look where you would place your stop loss, and you gotta look at how much points, pips, whatever it is. If you bought up there, just coming down to looking at 15-minute structure, that's 22 to 23 pips below there. So are you prepared, if you bought right now, to put 23 pip stop loss just to be below those previous lows? If you want to go a little lower, then you're talking about 30 pip stop loss. So if you're entertaining that trade, you got to think in your head, what am I trading? If you do that with a standard lot size, okay, I know a standard lot size are $10 per pip. If I'm risking 23 pips, I'm risking $230 on that trade. If I go 30 pips, a little more, I'm risking $300 on that trade. Maybe I only have a $2,000 account. Is that over leveraging? Yeah, it is. If you only have a $2,000 account and you go into a trade like that, if you go into drawdown 10, 20, 30 pips, you're down 100, 200, 300, you're going to panic. Okay, so that's right there. That's too high. That's one of the biggest things that traders do is they're over leveraging. So then obviously that's too big. Then just cut it in half. Half a lot. What is that? That's $5 per pip. 20 pips, you're risking $100. 30 pips, you're risking 150. Maybe that's too much. Then go a quarter lot size. Go at 0.1. That's even a 0.1 is $1 per pip. If you're risking 23 pips, you're risking $23. If you're risking 30, you're risking $30 to potentially make how much? Is the risk worth the reward? R&R. You always want to get good R&R. Okay, so that's why traders say instead of buying the highs, wait patiently. It might take a while, but wait patiently for a pullback and buy in here. At least you're buying where you can see a buyer came in here, a buyer came in here, a buyer came in here, a buyer came in here. So that's the only difference. So if it comes back down there, if I was to buy in there, if it came back there, I'm a buyer right there, then as it's retracing back up to where it previously was, I'm in the money. And in my stop loss, if I was originally going to use 20 pip stop loss and I bought the highest point, my stop would be down there. Now I'm buying down there, and then I can place a 20 pip stop loss down in a deeper demand area. So even if the trade comes in here, I can assume that bigger buyers will protect my position and come in here because they're buying pullbacks. So that's using a little bit of proper risk management, as opposed to always buying highs or selling lows. Like look at today, just look, back test. What did these sellers win this morning when they sold down there? No, because look at how the market reversed on them. So went after their stop losses. Again, these traders in here, 10 a.m., they tried to sell and sell. They wanted more. They said the gold is going to collapse, and then gold retraced back on them. They're not using 20. That's not a 20 pip stop loss. Okay, so these guys are liquidated out of the market unless they're, I don't know, just measure it from like these lows where there was these lows to where we're trading at now. Do some of you guys risk 120, 130 pips on a trade? Unless you're looking for a swing position. But if you're scalping the markets intraday, that's like a daily goal. You're risking on an entire trade doesn't make sense. Okay, so now, like how I showed you how it looked on the 5 minutes, the 15s. Okay, so had I bought that high up there, see how it just came up and then now they're bringing it right back down. So 5-minute trader, instead of buying the high, wait for your pullbacks. Okay, it's better to buy a pullback than buy a high. You're getting in at a better deal as opposed to buying the high. Okay, but sometimes the markets don't come down. We like sometimes the markets don't come to your where you're patiently waiting, and that's the name of the game. Sometimes there's days it doesn't, some days it comes all the time to you. So you just gotta be patient, be disciplined, understand what you want out of these markets. Look at that rejection now. So it did come up there, it took out these previous highs, but we still have that big block above us. So that block is still holding. They're pushing it down now. Now we got 3.5 minutes to go. Are they going to take out all of the green volume we had in that 15-minute bar and start to produce a bearish pin bar or a shooting star candle, pushing down, breaking our trend line, taking out that 9 EMA, taking out those 4 support zones? Now things will start to get interesting if this structure is getting ready to break down. We do have sellers. I still see some indecision on the 15-minute on gold. I'm still not convinced to put my money in the markets yet. There's lots of indecision. It's kind of still consolidating. S&P, we got a pullback holding. This candle too is going to close in 3 minutes. Are we going to get some green volume closing back above on the pullback above that yellow line? Maybe then I might be looking for potential continued upside on S&P, or are we going to start to trade down in here? So let's follow now, again, how these bars closed. Guys, it's roll up the rim month at Tim Hortons if any of you guys are interested. Roll up the rim. Please, if Tim Hortons is out there, I need a sponsor. I would love 2 free coffees every day. A regular with honey or black with honey. We're accepting Tim Hortons sponsorships right now. Sergio, black coffee with honey. It's great. I love it now. I used to do double doubles, but too much. 2 cream and 2 milk. It was too much. Sorry, two cream and 2 sugar. Too much. Now I've gone down to regular. That's one cream, 1 sugar, and now black with honey. Much better. Okay, so gold, see how it came down? Now we're coming back up, filling good volume. Okay, so nothing has really broke down structurally down here. Okay, will the candle bar close with some nice volume above here? Can we trade off of this bar? S&P, what's going to happen? Where will it close here? 60 seconds go. 1 more minute, guys. Wow, Jorge, you're from Colombia, and Cafe Quindío Premium is the best coffee. Only $10 costs for 700 grams. Oh, Colombian coffee is great. Okay, guys, last 30 seconds. Let's watch. Last 30 seconds. Here we go. I haven't been on a 15-minute candle in a long, long time. I used to trade these things, and then I said I got to kind of speed it up. But they're good to learn. They're great candles to learn. They're great candles to teach you patience. Great candles to teach you discipline. It's a good time frame to understand the context of what's going on in the markets. Okay, so just relative to the close. Did it close with green volume above? Yes, it did. Are we still holding here? Okay, and then potentially it's holding. And could we continue to fill this imbalance coming up to here? With gold, okay, where's roughly 50% of this green volume? Right there. And you see how about 50% of the volume is now lined up with that body and that body? So I got now like structural support at a body, and 50% of that green candle. Okay, so if gold now comes back down, maybe that might be a good opportunity to look for a pullback buy, and then there's your zone. Okay, so you use your red line and bring it back down to your white line, and there's your zone. Anywhere in here would be, if gold retraces back down here, might be a good opportunity to look for potential buy in here. But again, you got to wait for that pullback. Got to wait for it. Otherwise, you're welcome to buy up here and continue driving, but you got to understand that sometimes when you buy the highs, then that's when the pullback happens. And then there's patient traders waiting in here while you bought and you're in drawdown. So that's the only difference, is sometimes markets trade at the highs and they continue driving. Sometimes they don't do that. Sometimes they come and then they pull back. Okay, so if it's just this is what I would do to combat that. Someone says, Ron, well, how do you deal with that? This trade, if I'm buying the high, I go in with a little smaller lot size than I normally would take if I'm patiently waiting for a pullback. Okay, so let me repeat myself. If I was going to buy the high up here, I wouldn't go with the same size that I'm going to use in here. Why? Because this is more, I'm buying at a discount. I'm buying at a zone that was resistance, maybe turned to support. I'm buying at the trend line. I'm buying at the 9 EMA. I have multiple confirmations down here. So that's where I would possibly buy with a normal size. Okay. And then just place my stop loss accordingly. Because if I buy right now with that same size right here, what happens if I did that on this candle? Then it came down. What happens if I did the same thing on that candle? Then it came down. What happens if I did that same thing with that candle? Then it came down. Okay. So what happens if I did it right there and it came down? So there I would take a smaller position knowing that it could retrace on me, but not really cause harm to my account or my trading for the day, because it's kind of like you're feeling out the market up there. We don't know what will happen up there. We're trading the first time in this big supply zone today. Okay, so there could be heavy selling pressure in there. So you know that you're buying maybe possibly into heavy selling pressure, and if they do slam it back down, there's traders who are patiently waiting in there. I guarantee you there's a big block right below these lows of liquidity right there looking to buy. Okay, if this one doesn't hold, guarantee you there's a big block right there. If that can't hold, the bigger block is right there. So it's just allowing the market to come back down to you. Sometimes it doesn't. That's the thing. Sometimes the market will keep moving, but that doesn't give you the right to just now say, fuck it. I'm not going to continue to wait down here. I'm just going to continue buying the highs. Because what are you doing? You're playing that FOMO game, that fear of missing out game. The market wants you to play that game. They love when you play that game. The market loves when you buy all the highs, and then they can slam it down on you because you're over leveraged and you're going to panic, and they'll grab your liquidity in minutes. Same with down here. The market loves traders that will sell at the lows, because then they'll stop you out, grab your liquidity, and so you have to be cautious with that. It's hard to display it on an everyday basis because sometimes pullbacks don't happen. So, but that doesn't tell me that I'm going to throw everything out the window, and today everything that I learned over the last 20 years, I'm going to just change it because I think today it's going to be one of those days where it's just going to not pull back and just continue driving. If it is one of those days, it is one of those days. Okay, but what I do is I understand that the market eventually will have to come back down here. The market will have to come back down here. The market will have to come back down here. The market will have to come back down here. When is the question? I don't know. Will it come back in the next 15, 20 minutes? Will it come back in the next hour? Will it come back tomorrow? Will it come next week, next month, next year, 5 years from now? I don't know. But there's pending orders waiting in here. Okay? And then just news-wise for the week, hopefully you guys went through it. I posted a video breaking this down. Monday we don't have too much news. Going into tomorrow, quick news. Consumer confidence at 10 a.m. Looks like it's forecasting going down, probably coming a little lower here. I'm just saying consumer confidence. I'm not talking about like who they support politically. I'm talking about cost of going shopping, okay? Listening to Walmart, listening to Amazon, listening to maybe Home Depot, listening to the price of the groceries, looking at the price of gas. Are consumers happy with that, or are they losing confidence and getting a little conservative with their spending? So I can't see too positive over here. That's just me personally looking. Earnings this morning, we had Domino's, okay? Domino's pizza. Probably all of you guys order Domino's delivery to your house. Look at, even Domino's is down. What better to do is just stay home, watch a movie, and order pizza and have it come to you delivered. Their earnings per share and their revenues were misses in Domino's. Normally, Domino's is solid, always exceeding expectations and estimates. Domino's is down. Okay, so when Domino's is down, that's telling me less people are probably buying takeout. Maybe they're making own food at home. They're not getting as much deliveries. Okay, that's like a treat when you order Domino's pizza and you get it delivered to you, or Uber Eats and shit like that. Those are like, you don't have to do that. You can still go make your own food. But when you have a little bit of extra money, yeah, you want to have a Domino's pizza and things like that. But you can see, ask yourself, why is it going down? Okay, so kind of get some indicators here, leading indicators. In the after hours, okay, we got a few in here. Him and Hers Health, this is kind of Ozempic. Riot Platforms, this is your blockchain mining companies. I'm curious to see what their earnings are going to be, to see if Bitcoin will have a next leg coming up or if it's going to sell off a little bit more. I'm curious to see what the Bitcoin miners are doing. Okay, so now gold. Gold is looking strong right now. The US dollar is losing support right now and selling off a little bit. Okay, so S&P retested this critical red line. We'll see if it can hold volume. Gold now is breaking through here. So there's that 618. So this is now from this retracement, from this high point, 9 a.m. this morning. We plotted it to the low point 10 a.m. this morning. So one exact hour. This is now the retracement now. So we went above 0.5, that psychological zone. The next one, this is the bigger one. That's why this line is yellow. This is your golden line, retracement, 618. And I also have my white line there representing that that's where my hourly resistance is. If we start to look at RSI indicator, we are currently above 50. Okay, we're nowhere near being overbought. Okay, that was prior to this morning. What happened at 9 a.m. Okay, we were overbought, and that's why they dropped the market down. On the low of the day, you can see the strength did not go into oversold territory. It's still holding above 36. So that's still telling me it's somewhat strong down there, not weak yet. And then it managed to climb back up to the psychological 50%. From 0 to 100, 50 is in the middle. We're kind of gaining a little bit of strength above here, but will it continue moving through here? So we are in a bullish zone right now on your strength indicator. It gets stronger up here. That's why sometimes if you're trying to sell when it's 70 or above, it's seen as overbought, but there's still very strong strength that could cut through there. Okay, so is this going to now consolidate down here? Is the strength going to increase to maybe cut through this major supply zone, or is it going to start to correct itself back down to 50, and then we get some consolidation? Okay, so I'm curious to see what's going on with S&P right now. See if we have 5 minutes left. So it came through there. That's where they had that gap up candle, came red all the way down, respecting still that 9 EMA. We're still holding above 50% of the green zone, so we didn't really break down. It's still naturally holding, and they had enough momentum to come back and retest that high and then just get rejected. So let's see now the close. Will buyers continue close above here? Will sellers push it right back down? We'll watch gold. Let's watch how gold taps right into and what the reaction is here. I'll give you guys the exact point. Pay attention to here, 29.46 and decimal 40 cents. Right in there, if we do come in there. What type of reaction? Let me ask you guys. What type of reaction do you think we're going to get in here? Do you think we're going to get a green candle that impulsively breaks through here? Or do you think we're going to get rejected and sellers are here to push this down? What do you guys think? Nothing? Nothing from you guys? No guess what's going to happen up here? And look at the time too. Okay, so I kind of want to walk you guys through this. We're almost at 1:30 p.m. Eastern. Okay, so a new 30-minute candle coming. We've got volume now coming up to this very, very critical area. So will it continue driving, or do you think we're going to get a retracement coming back down? You think it's going to touch, that is going to pass, but touching the wick on the left and go down. So touching the wick on the left, okay. Over here, it will be a retrace. Pop, retrace. So this is this nice bullish channel we're in right now. Okay, so if you want to extend this, this is our channel. So trade it at the highs, back down, holding, trading at the high of the channel. Could we come back down? It's going to close above and we continue driving. Let's watch now. Pay attention, guys. 2.5 minutes to go. And remember, we're on 15-minute candles, okay? This chart is gold on the right, and this chart is S&P 500 on the left. We are on the 15-minute time frame on both. Shaquille, I think that considering the new 4-hour just opened, we should retrace before pumping. Okay, good observation. Okay, so 2 minutes to go. Now it's breaking. Okay, so good volume break. Okay, so first time now it's broke. Okay, so you see how it got a wick and came down. So it touched those orders up there, kind of transacted up there, and then there was an initial selling pressure. But as the candle comes down, you see how it's filling back up. So it wants to come back and maybe retest those orders up there. If it comes back up to the wick and then goes higher, okay? So right now it just kind of impulsively transacted with those orders there. We'll get more information as to when this body closes, where it closes in the next minute and 20 seconds. Same with S&P. It's coming right back up to the resistance. The next 15-minute candle come back down red, or will we kind of push and drive to that hourly resistance right there? Can we maybe buy a pullback at 50% or back down in the green zone? Okay, so let's just pay attention now to the close. 60 seconds. Gold, okay, broke out, came up through. So it's transacted through this hourly supply on these 15-minute candles. Okay, will it close above? And then you see if it closes above, naturally the pullback would be at this 618 white line. That would be 50% maybe of the volume if it closes up here. We could maybe buy a pullback buy in here. Maybe it might close below here. Then this is resistance, and then that looks like maybe the impulse breakout. But 25 seconds to go into the close. Let's figure this out now. Okay, so here's the close on both securities. Pay attention to where, how. So we did close above that 618, okay? We do have a rejection there. So they opened it initially, ignited red. Okay, so open, ignited red, push down. So how will it react? If it comes all the way down to that 618, that same line, the hourly, is this going to hold as hourly support, hold structure, so that we can continue to move up? Or are we going to lose this immediate support here and it breaks down a little lower? Okay, so we're still trading inside the supply, but we have a really nice green candle that pushed through there. Okay, so the retest, did it come all the way down in test here? No, it tested kind of that trend line holding, and this could be continuation to the upside. Where can we go to? Okay, you see the big red candle coming down from that yellow line down to the red box. See that last previous high wick right there? I would pay attention to that wick right there. Okay, to see maybe if it impulsively breaks through here, that's where it could get rejected, because that's what started the big rejection right here. It came up, and that's what started that big leg going back down. Okay, if they want to protect this area, then will they sell it down again right around this red line? Will it even come up to this red line? Okay, see those two high wicks? Right now I can see that they're equally high wicks. They're the same equal high. Okay, those are those tweezer tops. See how they're equally, there's no new higher high break. Okay, so that's giving a clue right now. That is giving a clue that so far that candle that just opened didn't have enough momentum to break for a new high. The market said we're shutting you down right here, exactly at 2,947 and 65 cents, dropping it down. So now it's red. Will it come back down to test the 618 here? The shooting star candle coming down. If it cannot hold here, will it come a little further down? Okay, so let's let this candle kind of transact, consolidate in here, and see if it comes back up, makes a new high. If it comes back up and they push it back down. But at least we've figured out a tweezer top high. Okay, so if anything from this call, at least maybe we can take something that we learned from it. Equal highs. So now we want to figure out, is this where the move ends and they're going to start to push gold down? Okay, so now it's coming to retest this exact area, this one. Our S&P is still consolidating within here. A lot of the volume is concentrated within this zone. If you want to trade this zone, you're more than welcome to trade this zone. However, if we're still waiting, we're still patiently waiting to see what's going on in here. I could see maybe it came up, back down, neckline, came back up. Maybe this is kind of like the second leg coming down. If it takes out that low, maybe close below there, come back up, and then could start the market to retrace back down. Okay, similar with gold. If gold doesn't get support coming in with that big green body. Okay, but do you see how kind of equal highs right there kind of took the momentum away from the buyers so far? Okay, I'm not saying that that's it, the move is over. I'm just saying this start of the candle, that's it. They ended that run. So now they're pushing it down. As they're pushing it down, remember you got pending buyers in the market trying to continue to buy and bring it back up. Okay, so this is where sometimes you'll get indecision. This is where you'll get consolidation. This is where you get both sides accumulating. There'll be sellers selling and there'll be buyers buying in order to continue to move this volume within this supply zone. I know I have a lot of lines on the chart. I got a lot of boxes, got indicators, got Fibonacci, got a lot going on. It is busy. I understand that. And sometimes this is how volume trades mid-afternoon. Okay, so remember, we're not trading like pre-New York. We're not trading Wall Street volume. This is now trading at 1:30, 2 p.m. Eastern. Like COMEX market, the commodities exchange, just closed right now. Okay, there is still trading going on, and then this now will lead into the next 3 hours going into the close of the market. So a lot of the volume is different trading at this time than you're traditionally used to when Wall Street market opens up. Okay, so look now, we came down. Did they now take out that high. Remember, it was equal highs. So right there, we can witness together they've taken out that high. Now it's no longer an equal high. They have created a new higher high in the market. Even if it's a few pips, technically, they've created a new high. Okay, we cannot, you can see it right there. There's no debate. Okay, now they create a new high. So again, now the depth of market is changing. Okay, you got now sellers adjusting maybe their pending orders above. Maybe they see that they broke the high, they took their positions here, they pulled them out of the market, and they're putting their sell orders higher because maybe they see that the depth of market is building. Same with when it broke that high, maybe it's a reshuffle of all the orders below us. It could be buyers now getting like where they want to, like for example, all of these blocks down here, down here, down here. You see how the move is diverging away from all of these? So maybe now offer bids are now increasing, like to maybe here they want in as opposed to there. Maybe this one now, this block is now starting to come up to this area in the market to get filled. You know, they still want a pullback fill, but now it's at this area. Okay. Will we get volume closing above? Now, if we get closing volume above, this changes a lot because this red zone will be the first time we're flipping it green. This 618 over here, this could become support going forward. And then the depth of market below us is continuously getting stronger and building and building and building. So when there is a corrective phase, it's just going to get bought up. You know, there's a lot of pending orders waiting to buy pullbacks in the market. And tomorrow we'll do something different. Tomorrow we'll bring it faster. We'll do maybe 2, 3 minute, 5 minute scalping. Again, I just want you guys to just get a feel of the different time frames. If you guys feel comfortable staying on 15 minutes, I can stay on 15s. I'll trade them with you. I'll analyze them with you. But if you guys want to go a little bit faster, you tell me. If you want to learn faster, you tell me. I can go as fast as you guys want. I can bring it down to the 1 minute, 30 seconds. But I'll be talking a lot faster. I'll be probably explaining concepts as before candles are even closing. And so you got to keep up with that. Sometimes it's too fast for people to learn. So I'm slowing it down for everybody so that we understand what's going on and then we can just speed it up anytime. I'm kind of rewinding it for us. Okay. Because I don't want to assume that everyone here scalps the markets. Don't want to assume that. Scalping requires a different type of mindset. Ross, the 15-minute this time of the day is perfect. I agree with you. I agree with you. Like, but there's a lot of traders that don't. They like fast, furious action. It's nice to scalp, again, those early hours, pre-New York, Wall Street market open. Because for a scalper, again, we're only looking for 20 pips, 25, 30 pips. I can get that in a couple minutes trading Wall Street market open and I'm in and out of the day and I'm done. And that's it. Trade for 30 minutes, 45 minutes, I'm done. Before 10 a.m., that's it. I got the whole day to myself. Trading this now, the volume gets a little bit more consolidated. There's more fake outs, choppiness on lower time frames, smaller ranges. So then if you got a small range of 10, 15 pips, you got to know how to psychologically trade that. Because you can't always assume we're going to get the same volume that we had this morning in Wall Street. You know, that was one of the big problems I had as a scalper. I got used to scalping Wall Street hours. And I got spoiled with those 1 minute candles because they were 30, 40, 50 pips sometimes. You know, you hit one of those and you could be basically done for the day, or a couple of those and you're done. And then I used that same, like I thought trading later on in the day, candles would be the same type of volume as they were in New York. And then I figured out it wasn't. So I was always looking for that same expectation from Wall Street. I'd get in a trade, I'd go up 20 pips, which is fantastic scalp at this time of the day, but I always was expecting to get 50 or more, like at Wall Street. So then it took me a time to understand different times of the day have different volumes. Different securities of the day trade differently throughout the day. So I had to put all these things together and understand if I'm trading at a specific time of the day, I got to change the specific style of my trading. And that was what took me a long time to learn. It wasn't learning the technicals of price action. It was learning what to do if I'm trading in London, if I'm trading in Tokyo, if I'm trading in pre-New York, if I'm trading Wall Street market open, if I'm trading right now, if I'm trading power hour, the last 30, 40 minutes of the day. There's a different type of mindset that you got to know how to trade that. That's where the learning and experience comes in, and figuring more about yourself, what type of trader you are. Some of you guys enjoy 15-minute candles. I see some of you guys are not screaming at me, like, because maybe you guys are used to 15-minute being patient like this. For scalpers, we're very impulsive. Ron, why are you not buying? Wow, where to sell? Like this and that, because it's on the minutes, it's consecutive. This is, you're slowing down, but you can still see what's going on. Like, I'm not taking my eyes off of the price just because I'm not in a trade. I see that that was one top up there. I see the pullback. Now I see, are they either going to punch out a new high, or are sellers going to come in and create the double top? And if it starts coming down, I know that there could be a possible break there. But it could be a break, and then I see, will it close below here? If it closes, then I know it could come up green, 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 because we're trading the green box, but then it gets rejected, then we lose the green, then we start to come down to here, maybe down to here, maybe down to there, and then that's it. Then we go back up. So I just take it from, figure out what's going on in this neutral box first. Then I figure out what's going on in this green box. Then figure out what's going on from here to there. Then from the white line to the yellow line, from the yellow line to the white line to the purple line. And each line has its own particular significance. I know the yellow lines are daily points of interest. I can see the 15-minute volume is still holding above this daily point of interest. This is just my hourly support to understand what's going on with the 15-minute candles. Again, this is another daily point of interest, 6,000 psychological number. That's that hourly support where we found the bottom today, where the volume concentrated, and then that's my low of the day down there. So I can see that we're moving away from the low of the day, but we cannot neglect that we have a lot of selling pressure coming from Friday, all down here. We had that corrective phase, and then they pushed it down this morning. So again, we're in a nice corrective phase right here. Do you see now what I see? Do you see what I see? Over here. Sorry for that, guys. But you see this green box. Now, what I do is I start to look at higher time frames. So what I do, pay attention to this, guys, please. See what I'm doing with the green box? I can bring it down to that white line. I can go down to right here, bring it across, and then you see what I did? I see how it held support there, came up. I see now there was the break. There was the close, the retest of that green box, and now we got this leg up. So now we're coming down to maybe a possible selling opportunity below here to there. I might look to sell that down into that green box. Okay, so if, right here, see, guys? See that M, what I was just showing you? How it came up down here. There's the that candle close below there, coming back up. If we come back down, right there, I might look to sell that. Sell it all the way back down to the green box. And then if I do take that, again, I'm just measuring the move so I know ahead of time. If it comes down there, 10 points, okay? 10 points, we understand, from 22 to 12. 10 points, 22 minus 10 is 12. And then if I want to figure out how many ticks that is, 10 points, multiply 4, we get 40. 40 tick move. How many of you guys that trade futures, do you think a 40 tick move is a nice scalp? You guys tell me. Would you be happy with 40 ticks if you are a futures trader? Maybe some of you guys are looking for 100 ticks a day, maybe more. Okay, now let's see where gold is. So gold, it's consolidating in the upper half above the 618 right here. Will we lose this and it start to push down, and then we can maybe come back down, trade towards the bottom of that trend line in that green box? Daniela, gold is continuing to go up. Yeah, we'll see if it continues driving here. I know the gold chart looks really, really messy, guys. Even for me, it looks really, really messy. Maybe I'll get rid of the 200 EMA since it's all the way at the bottom. Got a lot going on in here. And then if I look at the 5 minutes, have we missed out on anything? Was there anything significant on the 5 minutes? So not really. 5 minutes look choppy. Okay, 5 minutes looks choppy on S&P. So see how cleaner it looks with the 15 minutes? Okay, so kind of the 15-minute candle or the higher time frame above you kind of cleans up a little bit of the mess. Okay, those 5 minutes were all over it, but then you can maybe see how it's cleaned up a little bit more on the 15-minute time frames. So you can see now how you can use your Fibonacci retracements also to show you where there's support, where there's resistance in the market, how this now was resistance, volume closed above, now it's holding us support right now, showing us. See how now we got a red bar coming down. Okay, so 12 and a half minutes to go. If I'm kind of anxious to see, I don't want to wait for the full 12 minutes. Now what I can do is I can scale down to the 5 minutes and watch the 5-minute price action below here. Okay, I can see that there was a break right there and it quickly came back up. But now we're coming all the way right back down. I'm going to watch this 5-minute candle, how it closes in the next 2 minutes to see if it will close below this area or will it come right back up. Thank you, Patrick, for joining. Have a great day today. You can also see how the 5 minutes are trading on gold inside here. Very, very tight area still. Okay, so we are now potentially breaking. There's our yellow line. That's that daily point of interest. Okay, so this candle is going to close in 90 seconds. This is a 5-minute bar. Okay, but if I do take a trade off of the 5-minute bar, I'm going to go back to the 15 and then determine where my stop loss is going to be, my take profit, because then I'm going to continue to ride that 15-minute volume. But maybe I'm looking to enter right now prior to the 15-minute bar closing. Otherwise, you got to continue to wait for that 15-minute bar to close, which is 11 minutes away. So I'm just trying to maybe look to get in a little earlier, maybe to get a quicker scalp. But see, that's just me, my mindset, moving from 15 minutes to the lower time frame to 5 to look for an entry. But some of you guys just strictly stay on the 15-minute candle and you wait for the 15-minute bar to close no matter what, even if there's 11 more minutes and it looks like it's going to possibly break a critical support or resistance area. Just showing you how I operate. I can go in, I can even look at the 1 minutes. If I kind of want to enter on a 1 minute and still play the 15-minute, I'm just looking for an entry. Once I enter, then I can go back and then watch the full 15-minute candle close. But then I justify my stop loss, my risk to reward on the 15-minute bar. Unless I'm looking for a quick little scalp to get in and out. But you got to determine that before you even take the trade. You got to know exactly what you're looking for. So when you're in the trade, you're not guessing. You have a strict plan. Did that 5-minute bar close below? No, it didn't. So they gapped it down. Now it's coming up green. If it comes up green, it potentially wants to retest that 9 EMA or 50% of that red candle, and maybe they're going to continue to push it down. So maybe I do have to wait for this 15-minute bar to close in 9 minutes to really confirm to me, will this volume close? But it is coming down, so I guarantee you the 5-minute candle looks like it wants to break down. Okay, it came up green, 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 wants to break, could potentially drop. Okay, it could be an impulse drop through here, but then I look, there was a higher low, higher low, higher low. Is it going to come down a little bit? I'm going to assume there's buyers in here because they were there, they were there, they were there. So I'm just going to place like a green line to show you. There could be buyers right there. Okay, and if they get triggered there, they still could produce a higher low in the market. Okay, this red bar could come all the way down, trigger that, and go back up. But we'll see if this red volume continues. There, okay, so there, it touched. So I know that they're hitting pending orders right there. Okay, now will it get a wick and come back up? Okay, see how it got a wick right at that green line? I wasn't guessing why to place it right there. I can see like structure on the left of the chart. So it enabled those orders. There was buyers pending, but remember they're buying against this red volume coming down. Okay, so that's why I look, will this bar physically close below this daily point of interest? And then again, this will close in 3 minutes because we're on fives. But if you pay attention to the 15, that's the 15-minute low. And it's right located at the 15-minute body right there. Okay, so let's see if it continues to hold. Will we get our first 15-minute candle close with red volume below 6,022? There's the M pattern, double top with lower highs, but now it's trading down at the support of the 15 minutes, the neckline right here. Okay, so maybe something is developing now. This is how it looks on the 5 minutes for 5-minute traders. Okay, and remember, that was the last successive low on the 15 minutes, 6,019. Okay, so could they possibly break for a new lower low? Again, that will change the depth of market above us. If they do not break a lower low, that's going to change the depth of market. It will change how many offers we have up there. It will change how many bids we have coming in the bottom. All of these things. So far it held. Okay, so the 5-minute candle broke, but didn't take out the lows, and then buyers responded by turning the candle back up green. Okay, so you can see if you sold early without confirmation, it was an impulse break. On any of the time frames, if you sold on that 15, even the 5, before anything closed, you still do not have any verification that any volume closed below there. Okay, so now it's coming right back up. So it's developed a wick on the 15-minute bar. It's going to close in 6 minutes. Well, now all of this red volume, will it come back down? Will the buyers push all of this red volume back up? So it's not easy. Even as a 5-minute trader, you see it come down, but never really didn't break anything down here. So when it comes back up, 50% of that red bar is right there, the 9 EMA. We still have resistance. If the buyers are coming up, they might get pushed down. It's all how the candle will close. 30 more seconds to go on the 5. We got roughly 5 minutes and 25 seconds on the 15. We got gold on the 15, continuing to maybe break out and continue to push higher. Nothing has broken down to suggest that gold is breaking down yet. Nothing. Still holding, still this higher high, higher low, higher high, higher low leg up. Okay, so you see the type of response we got down there, suggesting buyers are still there. There's the close now of the 5-minute candle. So we closed right there. So if I ask you guys, technically, did any red volume close below there? No, it hasn't yet. So we're still in the consolidated accumulation phase, but the offers could start coming down, or buyers could start coming in and we go back up. And then we're going to get a final close of our 15-minute bar. I've kind of walked you through this entire 15 minutes, trying to show you on the 5s how it looks, going back to the 15. So we know which created the bottom wick. We know how it responded there. We have 4 minutes left to go on this 15-minute candle. We still have consider amount of red volume. Will the red volume continue to come back down? Maybe close below there. Then we could maybe start to see selling pressure on the next bar come into the market. Will buyers push this up? Are we still going to be in this consolidated neutral zone? Lots of questions, and we'll get our answers in the next 3 minutes and 50 seconds. Okay, and then if you want to watch on the 5s, okay, so it came up, now we're coming back down. Could be a red, green, red bar play. Maybe the red candle will continue to close below there in 3.5 minutes, maybe take a low. Then are we going to trade on the 5 or the 15? So I'm going to stick with the 15. We're going to watch the 15-minute close. That was what we did this entire call. And then do you see the neckline now? The supporting neckline. There was the one move up. We found resistance. Here's the neckline right down here. We came back up. There's that double top, lower high coming down. So see how we're trading in this. Will we close with red volume below this neckline? If it comes back, we sell that pullback. Then maybe we come down and trade into this green box. And then maybe it starts that next bearish leg coming down. However, buyers are still holding structure. It could, again, next 15-minute candle could open green, and we're still barcoding inside this green, red, green, red. Next one could be green, red, green again. Let's see now. 15-minute volume is now consecutively coming down. Here's our 15-minute candle. Will it break that green previous lows? Okay, or are you guys going to witness tweezer bottoms live? Well, let's see. Okay, so they broke that green line. The only thing holding up right there is this right here. I'm just going to move that green line to that. Right there. That's the only thing holding right now. There. So they broke it. So they just dropped it down. Okay. So that's that impulse drop. Okay. Now it's obviously hitting pending buys. When it drops like that, it's hitting pending buys all in here. Okay. It's also hitting these buyers' stop losses. These buyers and these buyers, their stop losses are probably below here. So it's coming down, it's hitting their stop losses. It's liquidating these buyers out of the market as well. Okay, so will it officially close with volume below there, or is it just coming down there creating a new lower low and then it's going to come right back up? Okay, but what it's telling me is it has officially created a lower low, a lower low, and a lower low. We've got lower highs and lower highs and lower highs above us. So will we get the volume now close below there? Let's watch that 15. So now the 15 structure, you see that the 15-minute candle has created lower low in the market. Where will this 15-minute volume close? 1 more minute and 10 seconds to go. I could be looking now to possibly entertain maybe a possible sell to continue to drop down. However, if buyers step in right near the end and reverse this, I could be buying again. Okay, so it's going to determine how the close is. I want to see red volume number 1 close below this daily point of interest. Yes, it's nice that it created that new lower low. That's perfect if I get into another trade. I want to come down that wick and continue dropping, but I'd like to see this volume close below this daily supporting area. Okay, so our close now is in 30 seconds on this 15-minute bar. Let's pay attention to how and where it closes. If you're following gold too, pay attention to see, is any green volume closing above there? Is it still consolidating in here? 10 seconds to go. And then we're going into 2 p.m. as well, top of the hour. Okay, so are they closing below here for a reason? Yes, so close below. Okay, we got a green candle. If it comes back up, where's roughly 50%? And do I have a wick? Can we stay red below here? if we come up green, 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 and it kind of gets rejected here and come down, we could possibly see our 15-minute offers coming down in order to absorb this green volume and then continue to push for that next leg down. Okay, so it just came up green. I expect it to come up green because we're trading in an area, depth of market, where there is buyers. So it did break, come back up, close, open. Did it come and take out that low wick? No. So it's green now. Now we're coming up green, 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 right up to, I have about 50% of the candle right there, but then I just lined it up with my yellow point of interest on the daily. We're trading right back into it, strong buyers, but let's see now if it starts to get rejected in here. So if we start to notice a wick, we see a wick, but can we exhaust all this buying volume? Can we flip this candle ready to go down red? Is this candle still building green? I'm going to retest this. Will it go up higher? This is the first kind of retest candle. Gold, open ignited, continuing to drive, still bullish. And then guys, this is sometimes where you get these moves like this, okay? So just continue with education real quick. Consider the market like wants to come down, okay? Let's assume the market wants to come down, okay? And you're a market maker and you know that there's a $20 bill sitting up there and you have the ability to come up there and grab that $20 bill before you take the market down. The market, if it sees lots of orders up there, pending orders, and it knows naturally it wants to reverse the market, it might do one final attempt up there to come and grab those orders and then reverse the market down. Okay? So sometimes you got to understand that. Maybe the market wants to come up one last time, take out those highs, grab that liquidity, and then say F you to the market. We kind of got all the money up here, and now it's time to reverse the move down. Okay? So do you guys understand that? That sometimes the markets are ruthless, and that's the way how the game goes. Okay? So I look for clues. I was looking to sell right there, but it's still a big green candle. Okay, so I want to see maybe where the resistance will start to come in. Where? Maybe there is no resistance. Maybe it's just strong green candle coming right back up. And then we determine what happens up here, or we continue running like gold is doing. Okay, so there's still strong support down here. There was the first candle that broke the low, closed, and now I was just looking for a retest to get rejected and pushed down. So you see how you got to have some patience with 15-minute candles? They take patience. You only get to see 4 bars every hour. Okay, and if you put a 2-hour session in, which is a good considerable session, you're only going to get to see 8 bars. So are you going to force trades like right here? If I just look at the last bars we've had, 1, 2, 3, 4, 5, 6, 7, 8. These are our last 8 bars, which has taken up 2 hours of our time today. Is there any significant trades that we could have taken off of these 8 bars? I just see a small range. Could have possibly bought, could have possibly sold, could have possibly bought, could have possibly sold, could have possibly bought, but that's what consolidation is. So there's still no clear path to where the market wants to move. You know, and sometimes you've been in the markets for 2 hours and you haven't even taken a trade because sometimes the volume is not cooperating to take a trade. So some days are going to happen like that, guys. There's been some times in the markets where I'm sitting staring for 3-4 hours and I still haven't taken a trade because the market is still trading choppy and consolidating for 3-4 hours. But I used to, back in the day, force trades in that because I was kept telling myself, holy shit, I've been staring at the computer for 3 hours and I haven't taken a trade. So let's just start trading without confirmations. Let's just trade to say that I'm trading, try and hit a goal and get out of here. But I'm forcing trades. It's not natural. And then I was making a lot of mistakes at that time. So it took me a long time to understand that if you, even as a scalper, even if I was analyzing the 1 minute candles, if I saw for 20 minutes I was in the market and I saw 20 single candles just doing the same shit that's going on here, that means that 20 minutes passed by and I haven't taken a trade. As a scalper, I understand that. So it doesn't give you the right to just force trades. Okay, so guys, I have about 10 more minutes to go. This call was scheduled for 1 p.m. It's actually over 2. I'm gonna go till 2:15. So tomorrow, if what we'll do is we'll come back in the markets. Maybe we'll bring it down to 5 minutes tomorrow to show you guys. But if you guys do like 15-minute time frames, let me know. Let me know, guys. I do enjoy this too because we don't have to make too many impulse decisions and things like that. And then I can really break down how the market is moving. Gold is considerably bullish right now, okay? But look at where it could possibly come to. Okay, so it broke above 618, 2,950. That's a fantastic psychological number. Could it start to get up there? Possibly. Could it break through there? Possibly. But all of these areas now could be potential supporting areas. So like this green block, you can start to kind of bring it up to maybe a little bit above that 618, a little bit below that 618, like right in there. Maybe now let's get rid of this supply zone. Okay, continue with these trend lines, natural trend lines. See if everything it comes back in, can hold. Okay, so if there's a pullback red, again, you're buying at the 618, you're buying in that block, you're buying maybe at the bottom of that trend line, and then maybe start that next leg up. Now, guys, look at S&P. We came up green, all the way to where that red candle opened. Equal high at that open and got rejected hard now. Now we got 7 minutes to go. We've lost a lot of our buyers. They just kind of got exhausted. They bought right into that selling pressure. And I look at the wick, it's a lower high, pushing back down. This is an inverted hammer candle. Looks like a hammer that's just upside down. Remember how it opened? It opened strong. So this is the only volume left in this bar. It's going to close in 6.5 minutes. So we see right there, it's showing us there's a lot of sellers absorbing these buyers. Can they maybe close it red again below here? Then that would maybe determine whether we're going to continue to drive down. Okay, did they come up and grab all those pending orders up there, that liquidity that I had? Maybe not. But did they come up there and grab some liquidity? Yes, they did. Maybe they didn't need all that up there. Sometimes they might leave some pending orders behind because they don't want to spoof the market. Okay, they don't want to scare or cause fear. Tammy, you trade 5 minutes, but I keep in mind higher time frames. That's fantastic. I do that too. I scalp 1 minute candles, but I'm always flipping over to see what the fives are doing. Every time frame you trade, guys, you should always look at the next higher one. If you're a 15-minute trader, always maybe look at the 30 or the 1 hour. If you're an hourly trader, consider looking at your 4-hour time frame. If you're a 4-hour trader, consider looking at your daily. If you're a daily trader, refer to your weekly. Okay, look at now, guys. Is this candle going to flip red for the first time with 5 minutes to go? And if it flips red, it could start to continue to push down. So ask ourselves, do we want to trade on impulse or do we want to verify on the 5 minutes? Look at what's going on the fives. We came back up green. Here's the 5 minute candle coming back down, closing in 10 seconds. We got a red, green, red bar formation. Will it close red below here? There's the close. Okay, so you see the little candle that flashing red below there? Will it come and get rejected and pushed down? If it does, Remember, we could be following with that 15-minute volume pushing down. Or do we wait for that 15-minute candle to officially close? That is the question. So I'm going to stick with we wait for the 15-minute close because we've spent this entire call on 15 minutes. So let's continue to respect our 15-minute candle. You guys understand how it came green, green, green? That was a strong, big green candle, but it traded in all of that resistance. And those sellers absorbed them and started pushing this down. But we have not lost the opening balance of the candle. Okay, yet, so far. 4 minutes to go. Let me just get rid of this. We didn't see that spike to grab that liquidity. Any questions, guys? Do you guys have any questions, or do you guys understand that candle? That green candle? Was green candle. Do you guys understand what happened there? So 3.5 minutes to go. Okay, so sometimes you'll see watch for clues. Have you seen that volume green bar flip red yet? I have still not seen it go red yet. Okay, so there is still some buyers still holding this. Okay, so they're still there. There's still some buying momentum. I don't see a lower low in the market yet to suggest that anything has broken down technically yet. I can verify that there was a lot of sellers up here. That I can confirm. There is the first time the candle flipped red. We have 2 minutes and 40 seconds to go. Now it is basically a shooting star candle on the 15. Okay, we can display this as a 1 minute candle, a 3 minute, a 5 minute. This is how a 15-minute shooting star forms. Okay, it takes a much longer time than a 5 minute or a 1 minute candle, but the same technicals, same characteristics. It opened green, 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 green. It was a big bullish engulfing candle. Come up here, get rejected. The sellers have overtaken the buyers in this time frame, and now they're pushing. But can they take out the next low or not? Okay. 2 minutes to go. So this is where some traders take a sell right now. But you have to understand, if you do, yes, you could get a continued move to the downside, but if it breaks here, it could create a new low and then reverse back up on you. So sometimes that's why we wait for verification for the candle bar to officially close. And yes, there is times you're going to miss out on a potential move. Like right now, it could come down and drop. But sometimes when we do that, what about these sellers this morning that did that same thing? They sold down there. And then they sold down there, and the market came back up. So, you don't always, like right here, these guys sold down there, and then the market reversed back up. We can definitely sell right here, but then what happens if the next bar comes back up green? So what I'm doing is to take sells off of this block. I'm just stretching it into the future. Pay attention to those candle wicks. Did it create a new low? Look, tweezer bottom lows, exact low. Okay. So we're coming back up now. I think we've learned a lot on this call about price action. Gold, holy shit, we're learning that this thing is bullish. So gold is coming right back up to test 29.50, a really important area on the daily. 30 seconds to go across the board, and then we're getting our official close of the 15 minutes. See how it created equal bottom lows? There's no new lower low. It's an equal low. So therefore, technically, psychologically, buyers are still holding position here. And then now it comes up green. How will the candle close? Indecision. Will it close with volume again right here? Will Next bar be red, 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 and then break. So maybe I'm going to enter now, like this new 15-minute candle. Okay, I see that there is buyers, but I only have this much distance to make up in the next 15 minutes to break it and drop further. So how did the candle open up? It opened ignited red. So if it starts to come down, I might impulsively go in on this candle because I got closing volume, I got a rejection, I got these equal bottom lows that could potentially have enough volume in the next 15 minutes to break and drop further. I just got to watch. Is it still ignited red? It is still holding technically. It's ignited red. Is the candle going to flip green to come up? Not yet still. Okay, so I can see it's still holding red, still holding red. Will it come down here to potentially start to transact? If it comes back up green, I gotta now maybe think of consider where I'm going to place my stop loss. Okay, if I'm looking at 15-minute structure, I got to use the 15-minute structure. Okay, so see how it now flipped green? Okay, so coming up, did it come down here and touch this? No, coming up green. Will it come back up, give me a retest up here? Will it stay below that 9 EMA? Okay, so far got rejected at that 9 EMA. Got this little doji spin top. It might come back down red now. You can see we could be now consolidating below this point over here. Okay, below the red box and now inside here. Okay, so there it got rejected. Okay, so we got rejected. We got red volume. But still, look at this 15-minute candle. The first 2 minutes, basically, just really small doji candle. So you've got to be just careful in here. Just continue to look if it gets rejected. How many times does it get rejected? Will it come all the way and attempt a red box again? Okay, so that's a considerable push down. So if it comes down one more time, I'm maybe going to enter into a sell on the S&P. If it can come down one more time, push down. And then I might be off the call. Nope. Okay, so green again. Now I got to watch how it will react if it comes and trades into that red box again. Okay, there's another push down. Okay, so this now, I see it came back up green again, same location they pushed it down. Okay, so if it can kind of break this low or get down to the low, I'm considering maybe possibly selling S&P here. Yeah. Okay, so I'm going to go in on a sell now. It's retested. I've given it enough time to retest. I'm in a sell now on based on 15-minute time frame. Okay, so now I see 15-minute structure. Where should I utilize or place my stop loss? Okay, I could go above all of this resistance. I could see that last candle that came up green, green, green where they slammed it down. I can place my stop just right above that wick. Okay, but since I'm so close to this area, I'd like to be above this resistance because selling pressure came here, selling pressure came here, selling pressure here, selling pressure here. So I feel safe with my stop loss up there. And let it room to breathe in case it pulls back, puts me in drawdown, then I still have that red block up there, maybe to push down there. But if it comes a little higher above that, I want to keep my short position, but I kind of want to give it room to maybe offers to come down and break down. Okay, now what am I looking for the move to come down to? Well, if I'm giving it my stop loss room to breathe up there, I'd like to see if we can come down and take out this low right there and cut through this green box and trade maybe 50% down into here, roughly to that 6,000 level, just above that daily point of interest. Okay, so again, this is a different security, points, ticks, things like that. You can get your measuring tool and measure. If it comes down there, 5 points. If it comes down there, 10 points. If it can come down there, we're looking about 15 points. Again, how many ticks? 15 multiply 4, 60 ticks. 60, okay? Now you can see I'm in profit right away with zero drawdown, minimal drawdown, okay? So this is a scalper's mindset. Do you want to just pip and dip, or do you want to allow this time frame to physically play out? Okay, that's something that you're going to have to decide. Also, if it starts to push down and you're in profit, do you want to reduce your stop loss prematurely? Do you want to hold for this entire bar to close? Okay, we have 10 minutes. We have a long, long time for this bar to close. But I feel like this could be what I'm looking at. I'm looking how it came up there, one top. We created a neckline there. We came back up with a second top, okay? And then this was a big green candle, but kind of like a statement candle where they pushed it down, they closed it below there. Then it came back up, and that was my retest candle, and that's what I'm selling. I'm selling that because I want it to continue to push down. I know it could possibly come down in this green box, and there could be buyers there. Come in here and then pull back up, but I'm hoping that higher time frames, hourly red volume, will start to push this thing down, create maybe a pullback there, and then they continue to break down and drop down in here. But I know that it could very well just continue to reverse, catch a wick, and go back up green. And just, this is a higher low, unfortunately, and then go back up. But I'm basing it off of like structure. I waited for volume to close. I saw that candle get rejected. It was a very powerful green candle. So it's showing me sellers were present there and really pushed all that volume down. So I want to trade now with this momentum, with this volume coming down. Hold till the end of the week. I maybe, who knows? Maybe we might catch 1,000 tick runner. Who knows? That would be something if we nailed it on this candle. Gold, look at gold relative to that yellow line, 2,950. That's a daily point of interest. See, it kind of maybe maximize that move, and look at this red bearish engulfing candle just dumping, guys. Okay, so if you were in buys, that's where traditionally you should be scaling out a little bit. Don't get too greedy up there. Okay, so we got 7 minutes to go. So we now look, we touched the green box the first time since these candles, and look exactly right at those 15-minute lows, that low and that low holding. Okay, so it's holding that support. Tweezers bottom lows right there. I can bring the line to show you. Look right here, these lows at noon, at the top of the hour, noon. So we're kind of retracing down from this move. Can we continue to push, maybe create a new lower low? Could we get this red volume to close below this green line? Will we use this green line? Right now it's acting as support. If we get red volume close below it, this green line might be resistance going forward, and we might be retesting this and continue pushing down. Okay, so we have 7 minutes to go. That's a long time in this candle. What we can do is we can watch like how it's doing on the 5 minutes. So this is the 5 minutes. This is where I entered, came in, closed right there. We came back up. We're retesting 50% of that 5-minute candle, continuing push down with a new lower low. Okay, but this green line is that big 15-minute support right there. There's those two candles. I can tell you it was 11:55 and 12 p.m. noon to see if we can continue to break down in here. But we're trying to sell into a big green box. So it doesn't surprise me that it's holding and it's kind of rotating back up. So now we got to trust the process of lower lows, lower highs, lower low process. Yes, it might come back to where I entered and then put me back at a break even. It might go into my drawdown, but I got to assume that the market is continuing to place offers and lower and absorb as much as these buyers as possible and continue pushing the market down. So we're watching it on the 15-minute candle. 6 more minutes to go on this 15-minute candle. Wow, David, you're holding multiple sell positions on NASDAQ from the high since last week. Tuesday, patience pays. Yeah, patience does pay off. But you probably are seeing like some of your unrealized gains, and pullbacks, but continue to go down. So us on the lower time frames, 15 minutes is a lower time frame, believe it or not. A lot of people think this is like a swing trading. No, 15 minutes is still intraday trading. So you still got to go through, the highs, the lows, the emotions, everything. And guys, remember the point system. it's different from, this is S&P 500, so it's a different point system from like traditional pips. So just on that move down, just want to reiterate from here to where it went, that was approximately 7 points. That's 7 times 4 is 28 ticks. Okay? So just for the traders that understand that, when you're looking to scalp. Okay, so now we have 4.5 minutes to go. And we came all the way down there. We tapped into that green box. It didn't break that structural level. So buyers are still in there pending holding. And then they're bringing it back up. Now, where will this volume close? Will it close red below this support that's turned resistance, this green line? Or will they completely flip this candle back up green, and then next candle could open green, and then we're coming back up to trade up here? Okay, so the close of this candle is going to be critical. It's going to be crucial onto the next move. So we got to hold for 3.5 minutes. Let's see how it is on the fives. Okay, so the fives are already making a little bit of a bottom. Okay, you can see they produced a bottom, came back, but look at what they're retesting. They're retesting that 15-minute, which was support, could be 15-minute resistance. Okay, so I'm going to follow into the close of this 15-minute bar. So, gold, okay, so gold came down red, 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 and then they came back up, but that volume is still absorbing them and continue to push down. I'm hoping to see some very similar with S&P, the way how it's coming up. The seller's going to absorb them and come back down. But structurally, what I need out of this volume is to close below this green line. Okay, if I can't get it to come all the way down here, I need it to at least close below here. At least we can confirm red volume is closing below 15-minute structure. That can help for the next leg to come. Okay, but if we lose this, then unfortunately we might get caught in a pullback. Okay, so it's very critical where volume closes. Same with this gold 15-minute bar. It's bearish engulfing. If it can close below here and maybe even below like that this green box, it could start the next leg really pushing down on gold. Okay, and then if I just switch to the 5, just show you what's going on. 5s are kind of consolidating down in here, possibly waiting for the new 15-minute candle to open up in 2 minutes. Okay, so you see the 5-minute candles also rely on the next bigger candle, the 15. Okay, so right now the 5-minute candles are just cooling off, catching their breath, and then the next 15-minute candle will dictate, are we going to come back up in here, or are we going to continue maybe cutting through this support area? I would hope we're going to continue pushing down. I'm in a sell. So I would love to see if the volume will come down, take out this low and close near the low. We might get one of those ignited short wick pop candles and drop. That this is how they're formed. So I always watch to see where the volume closes. And I watch this on 1-minute candles. I watch it if I'm trading 3-minute candles. I watch it if I'm trading a 15-minute candle. So remember, we're going to go down to the last 30 seconds. Is going to show us the fight between the buyers and the sellers. Guys, kindly leave us a like on YouTube if you guys can. If you do appreciate this type of education, and if you're learning, it keeps Dave and I excited to continue to come back on YouTube and provide this for everybody. And if you'd like to join the team, guys, visit stocksnipertrading.com. We do have promotions, 50% off, and we have an exciting crypto 6-day boot camp coming up. We got it scheduled for, I think, the second week of March. We're going to do it 6 days. Monday, Tuesday, Wednesday, Thursday, Friday, and Saturday morning is going to be a charting session. It's packed. Okay, if you want to learn about crypto and Bitcoin, It's a great little introductory course. Okay, here's the close. There's the close. Okay, so now look at how it opened. It opened ignited red in our favor, ignited red. Does it have enough momentum to take out that low wick? So far not. So if it comes up green now, number one, what I'm looking at is where's 50% of this red candle? Open, close. 50% is like right around here. So you see how it is technically where we had the support wick, that's now where maybe it's trading into resistance now. So this is a big, heavy green candle right there. It just traded into it. Will we get a rejection? Will they push this volume down? See how exciting it came in the first minute, 45 seconds. It was green, green, green. It filled, but now let's see if we can hold resistance right there. If this level cannot hold, then these green buyers will continue to come back up and trade and try and attempt to get back where and engulf this red bar or to that high or test this red block above us. Okay, so this is the first line of defense right here. The first line of resistance is just testing this fresh volume right now that's in the market. Okay, so sometimes you gotta allow things to develop. Yes, it's gonna eat away at my profits, okay? But when I took this trade, I wasn't just looking for just that. Remember I told you I'm looking to break this green block. So naturally, it moved up, back down, up, back down. So maybe it's coming up a little bit, but are we gonna move down with this? So yes, it sucks to give back all my profit and maybe possibly start to go into a little bit of drawdown. But it's the nature of the game of trading. Okay, I understand I haven't over leveraged my risk up here, but I got to let it play out. Okay, so this all started when? Right at 2:30. The new 30-minute candle shows momentum changing. Okay, but will this be short? Just like this. This was a big green candle at 2 p.m. where it came up green, 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 green. Very powerful. And then they rejected it back down and started this red volume. So again, we opened, we got green, green, green volume. But will they reject it down in the next 12 minutes or control this or tame this volume down a bit and then start that next leg down? Or is this going to, that's it. That run is, it's going to finish here. Like now this is going to be a supporting block, which it is still. So we traded right into it, but there's a significant buyers still in the market. We've got to wait for 12 minutes for this candle to close in order to determine how high it goes, how low it goes, who's taking over the second half of the candle, all of these things, guys, you know. So we're going to kind of let it play out. And just cleaning up gold here, just cleaning up. I don't know how much longer I can stay on the call, guys. Try till 2:45 here. I had a lot to do this afternoon. I was supposed to be out of here by 1. But sometimes the markets keep us, you know. I'll tell you honest stuff. How many times do you guys have shit to do and then you're trading and then you get stuck and then you forget to do those things that you had to do? I had a lot of errands to do today. So one of those things happened. Okay, so time management. Got to get better at managing time. I did a horrible management time today, and I got stuck in a trade too. Now I got to nurse a trade as well. Yeah, Nigel, if you're a wife, you don't have a choice. No, this was some stuff I had to do for myself, so I can do it tomorrow. It's not a big deal. But yeah, if the wife put me on something, oh, I don't think you'd see Ron here for a couple days. I'd be in big trouble. Okay, but do you see the difference on 15-minute time frames when you get into a trade, how long it's taking to like develop and things like that? I know when we watch fives, it's a little bit faster. Things are moving faster, but just got to pick your time frame that you're comfortable with and trade accordingly. Okay, this is the first time I've done 15-minute analysis and trading in a long time. Okay, we can definitely slow it down. Okay, so also gold. That was a big red bar that came down right down to that green block, and now it's coming back up green. If you look at that red candle, okay, how far into half of it? Will it completely engulf it? Will it continue driving? Then that will show us that gold is still very bullish. Like it had that big red candle, but you see how it came down to that green block and the buyers are still there. Now, when it comes up, will it be a higher low? Will they push it down? Will this come up? Similar with what we got going on over here on S&P. Came up green, right up to there. Again, to that physical body of the candle, similar to how it did right over there. And they've rejected it. They have not allowed a new higher high yet to form. Now they're slowly, again, coming in, pushing this down. But we have a lot of time left on this candle, 8.5 minutes to go. So is there enough offers in the market to push down all this green volume and do something like this again and then start that next leg going through? Or buyers going to continue to come back up? We'll figure it out. We'll know the conclusion in 8 more minutes. This is the suspense being created. Okay, so on the fives, I see it cool off. 230 came in here green. We've got a red candle coming back down. Will it come down, close below 50%, come down in here? Will it still hold? It's tough to decide. But I can start to see maybe where the market is starting to consolidate a little more. Like right here. Will this continue to be lowering offers down there and continue to hold? Okay, so we got a rejection. Number one, we need a rejection from that big green candle. So as a seller, that's nice to see. I'll tell you the honest truth. As a seller, I like to see that. It didn't create a new higher high. It's actually, in fact, a lower high. Okay, so that's good from a seller's perspective. And now it's also nice to see that we've kind of absorbed a lot of that big green body candle. But now again, here's where it comes down to the balance of the volume that entered when this bar opened at 230. Can we absorb these 230 buyers and continue to push it down, or are more buyers going to start to come in and push this body coming back up? But look at again where that green line was, that line of concentration. You see how it's a static line where it was support there, turn to resistance. See where the volume is trading? Exactly right again at that green line. So it's a point of interest on the 15 minutes. This is a critical point of interest. Will the sellers continue to hold the green volume below it, or will the buyers push above it? Okay. Val, have a great day today. Thank you, Daniela. Enjoy your day today, guys. I know it's been a long session. I didn't intend to stay this long. But that's trading. That's how it goes sometimes. Okay, so we're going to close this 15-minute bar in 5 minutes and 40 seconds. If we want to watch more on lower time frame, I can watch exactly how it closes on this 5-minute bar. 30 seconds to go. Can this 5-minute bar close below 50% of this green candle? Will this 5-minute candle come down and engulf that green candle? Then I know that I only have 5 more minutes left on my 15, and then maybe that might start that next push down to break through this green zone. But we'll continue on the 15. We're going to continue focusing on the 15. Nigel, is that M pattern forming on the M15? Yeah, that's what kind of I based my trade off of. Yeah, if you're talking about the S&P, Nigel, where it came up one top, Nigel, neckline right here. The second top push down. I got that, there's the candle that closed below. So we're coming back to retest, and they are technically pushing it back down. We just need to create a new lower low and cut through this green box, and then maybe we get the move we're looking for. Okay, but it's not easy to cut through zones. It's not easy for buyers to cut through this red box. It's not easy for sellers to cut through this green box. Okay, but it takes time to break down critical structure in the market. Okay, now we got our first candle that flipped red. We got a shooting star candle. Very similar to the same setup right here, guys, where it was green, 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 green. They rejected it back down. That's how that candle closed, with some green volume. Let's see if they can close it red. We got 3.5 minutes to go. So we've got a shooting star candle that's got the red volume now. So all of those buyers got absorbed. Unfortunately, they're in drawdown right now. Okay, so as a seller, let's break the low and then come down to, if these buyers bought, their stop losses are down in here. They're pending down in here. So as a seller, I want to break structure and come down and get more pending orders. Okay, we've got the candle bar we want. That's, as a seller, came up green, 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 lower high. It was a scary candle, but trusting the structure, it held and pushing back down. Now we need to create a new low in the market. There we've got an equal low, equal low, equal low. Here's the red candle. Can we break for a new low? And pay attention to the time on this 15-minute candle. We got 2 minutes and 40 seconds to go. Lots of time. But can we break for a new low? This is the time we want to break for a new low with this volume. This is where we want to make buyers think about their trade. Do you understand what I'm saying? Sometimes when we go into drawdown, we think about our trade. So this is now for buyers. Got to think about your trade. If they're buying on that green candle and they bought on that green candle and you see this coming down, that might be causing a little fear on the buyers. But if the buyers are still here and they're buying and they're happy buying in here, and we can't break this down, then probably the next candle is going to come up green again. Come up green. Maybe retest this. Maybe see if we get a lower high and push down, or that's it. This move could be ending. See how it could not break? So next candle could come up green and come back up here. That's the problem, guys. If you cannot continue with a trend, like create new lower lows, then you're allowing your opponent to come back in. You're not really making a statement. And it takes more time to accumulate, takes more time to develop. So far, that was a nice candle, but did not even break that low, just by a little bit. Okay, but let's just wait we have 1 minute and 10 seconds to go. So again, the last 30 seconds is where I concentrate to see who goes into the close. Guys, kindly hit the like button, please. If you do appreciate this type of analysis, it helps Dave and I to understand that you guys enjoy what we do. But by the likes, I don't know how else to ask you guys. This is all free education for the world. We come on here every day with you guys. And all we ask in return is we don't ask for any money from you guys on YouTube. We just say kindly like the channel and subscribe. That's it. Okay, so we've shooting star candle coming right now to low. So this is where we should have some momentum and break. Again, it didn't. It came right down there. The buyers are bringing it right back up. Okay, this is where I zoom in now. I really like to see what's going on. Okay, so I got some 15-minute structure. I see where the volume is. Okay, so first thing I'm looking at is the closure of the body. Okay, there's the close. Okay, so you see how they gapped it up? Okay, we closed down here. They gapped it up right up there, and it's a bearish ignited candle pushing down. So with this momentum, can we take out these lows? With this bar right now, we got the bar we want. We have a bearish ignited candle, but it's just got to break those wicks and then pop down a little further. Okay. However, if we cannot break these lows, we're going to get maybe a higher low wick, and then it's going to start to push this red volume back up. We don't want that. We want to maintain the selling pressure. Right off the hop, right when the candle opened, they gapped it up, and it was red ignited and pushing down. But you see how we encountered a wick. First wick is a higher low. So naturally the market is coming back up, but now we got to rely on our higher time frame. That was just the first minute of this 15-minute candle that opened. So far, still looking red, still holding. Now we're coming back down. So we have to take out this low right here, 6,011. This is the time to do this. This is the time where you don't want bullshit right now. You want to break this low, and you want to break it right now. Because you got the volume, you got that big rejection there. You have the prior rejection right there. Like, we have the buyers squeezed in the market right now. Okay, we got them thinking, but now you really want to make them think, you break it down here. There, first attempt. Now you could get your drip. This is where the like when you cut yourself, right? This is like, consider it like blood. Now you cut yourself. Now you could bleed down into here. We want to now bleed the market, bring it down into here. Okay, so that now all that did, Nigel, was confirm a new lower low in the market. In order to push down, guys, we have to continue to make successive lower lows and lower highs. So we got a lower low, a lower high. We had a lower low, lower high. We got a new lower low in the market. But every time we make new lower lows, new buyers are coming in and buying the dip. So we got a new lower low confirmed, but now they're bringing it right back up because there's buyers pending in there. Okay, they're pending all over this green box. So do we have enough selling volume to continue to trade down into here? Okay, this candle, 12 minutes, now you can see how we're losing our momentum. So as soon as we broke that low there, what did they do? There's liquidity down there. They grabbed the liquidity, and maybe now could be reversing. This is where we could get our leg possibly rotating back up. But if we trust our structure, then we got to also accept that offers are being lowered. Offers are being lowered. Like, I would think that there's going to be a little bit of a red block right in here. Remember, below that critical 15-minute supporting line, support. When we got red volume close below, if it comes back up, I'm going to assume that there's sellers positioning themselves right here. If it comes back up green, maybe sell right there. And then you can see how naturally the 9 EMA is coming down towards this red box. But the market might want to pull back up here. Okay, it happens, guys. It's happened this entire session where it came down red, went back up green. Came back down red, went back up green. Came back down red, came back up green. We came back down red. We could be coming back up green. But I still haven't noticed the candle flip green yet. Okay, so that's another thing I pay attention to. I haven't seen this candle flip green yet to suggest that we're flipping. So far that red volume is still here, still absorbing. Can we come back down to low and push for a new lower low? Okay, guys, final, I'm going to stay till 3 p.m. 3 p.m. Okay, next we got another, we'll watch this candle close, and then I have to leave at 3 p.m. because I got to go pick up my kids at school. Then I'll be in big trouble if I don't go pick up the kids at school. So guys, just think about this. When you have a trade that's profitable, I know it might not be exactly what we're looking for here. We got to allow it to develop, but also consider when you're trading how to reduce your risk too. Sometimes when you're in the money, it's good to reduce your risk. Like, this is my stop loss up here. You don't need to take your stop and go directly right to break even. You can if you want, or you can reduce it maybe above this red block. I had it up here. So if I reduce it to that red block just above, I've reduced a significant part of my risk. I still have a stop loss, but maybe I'm just going to go down with the market. Maybe I go down to this wick right there. I had it above here, but I could reduce it right down there. Slowly reducing it down, slowly reducing it down. If the market keeps breaking, and then eventually get my stop loss to break even. Okay. But that's all up to you guys. You guys got to learn how to do this on your own. Okay, so our volume now is pushing back down. So we've absorbed those buyers, and now we push, come back down to the low, and continue pushing down, 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 cut through this green box. But they're trying. Like, don't tell me that the sellers are not trying. They tried, but the buyers are bringing it right back up. Okay, so now the candle flipped green. Took 6 minutes, but now the candle's flipped green. So we lost all of that initial momentum. Remember when this bar opened up, they gapped it up and it was a red ignited drop and it just started pushing down. So we've lost that opening momentum. Okay, that doesn't mean that that's it, everything is over, pack it in, let's get out of here. No, that just means we lost our initial ignited open, but they came back up there and maybe more offers are being lowered and absorbing and continuing to push down. Okay, but or we might have it like a consolidating candle, like an inside spin top. We'll figure it out in the next 8.5 minutes. Could gold break a new all-time high? Absolutely. So it's almost right at the all-time high. It's not too far off. Yeah, I could see gold trading above 3,000 this week. Absolutely. Okay, so came up again, lower high. They're pushing it down. The volume is going red, green, red, green. Again, you might get some consolidation. Guys, don't be scared of some type of consolidation. It happens. You got to get used to it. Get used to markets trade sideways while they're still accumulating. But while they're accumulating, you got buyers and sellers. Okay. But overall, if it's still respecting the structure, okay, now we've got 7 minutes to go in this 15-minute bar. So again, red volume, lower high. Okay, so sellers are still there. Now, can they push down with this volume? Like, I like to look now, what's my next higher time frame on the 15? The 30. Okay, so this 30-minute candle is going to close in 6 minutes going into power hour. We do have our large rejection pushing down. So can we get 30-minute volume closing down in here going into power hour? That could illustrate that we could continue to drop down further. However, if this closes again green, power hour could start with green momentum coming back up, but they're buying against some selling pressure. Okay, so it's going to determine the close of this candle relative to this green line. Again, that green line was the 15 and 30-minute support. So here's that green line right here. We can look at that green line on the 5 minutes right here. Here's that green line. Okay, so can we get 5-minute volume closing below that green line? This 5-minute candle I want us to pay attention to is going to close in 55 seconds. Let's see if we can get some red volume close. Do you guys see this green line right here? This green line held support right there, support right there, support right there, support there, support there. Can we actually physically close with some red volume below that? Okay, we got maybe a shooting star candle developing on the 5-minute. Maybe it can close near the low, and then maybe next candle opens ignited red, and we just kind of cut through a lot of this structure. Okay, perfect. That's the shooting star candle we want. Leading into the close. Remember, I always say, pay attention to the last 30 seconds. That's the candle bar we want. A shooting star going into the close, but can it take out that low and close with this volume below this green line? Watch, we might get the first time an ignited bar just pop and drop because there's no wick. We're closing near the low. I would love that. Give it to me. That would be perfect. Okay, so there's the close. We don't have a new lower low, but they gapped it down. So what's that when they gap it down, they're suggesting that they want to take out that low and break it down. Okay, so we got it. Okay, they broke it down. Don't be surprised if you get a wick coming right back up, but we got nice volume selling through here. Why? Because the 15-minute candle, we're following this. Okay, guys, so dropping a little further. Remember, ticks and points are a different system over here on S&P 500. Now, can we verify that we've created a lower low on the 15? Yes, we can. Okay, so you know when you create new lower lows, you're going to get new buyers in the market, possibly bring it back up. This candle is going to close in 4 minutes, 15-minute bar. Can we close now with the volume below that green line so that we can continue to push with this momentum? This green line is going to be very, very critical. This is the biggest point of interest on this 15 minutes. Okay. Are you guys starting to understand a little bit technicals, a little bit better? Am I breaking it down okay? That you guys understand this? It's live. I'm in a live trade. I don't know how else to break it down. We're not back testing. You guys are probably part of the trade as well with me. Now, look, it's coming down. Now we're breaking down. So we're benefiting from this. There's a lot of pending orders down here. There are all these stop losses of these buyers that are getting liquidated right now. All of these buyers that were buying, they're losing money and we're winning money. That's how this game works. Okay? So this drop now, coming down to the bottom of the green box, is 12 points. 12 times 4 is 48 to 50 ticks. That's a fantastic scalp, guys, even on a 15-minute candle. Okay, so this is where I'm going to reduce my risk now. I'm going to go to a break even because I got to go pick up my kids. Okay, so guys, I'm reducing my entire risk while I'm up in profit. Now I have nothing to worry about. I can go pick up my kids knowing I have no money at risk. I'm in the money. Worst case is the market comes all the way back up and stops me. But I'm not going to be silly. I'm up some pretty good money right now. So I'm going to, can I wait for this candle to close? I can, or could I just secure? I'm going to secure half of my position right now. So I'm going to close out 50% so that I made up for the time on the call. Time is money. So I'm taking out 50% of the market and I'm going to leave 50% running with a break even. And if it continues to break down, fantastic. But I still secured 50%. I'm okay with that because it came and traded right down to the bottom of the green box. Okay? Because I know that it could flip and come back up. But let's follow into the close. CC, my pleasure. No worries. Congratulations, guys. No drip. You did well on that. Good job. Guys in Zoom, boom. You got your daily goal. Boom. You're killing it, my man. We got a Sunday. We got a lifetime call. We're going to talk about it. Runner can do what it wants. Yeah. The runner can keep running. Hopefully our runner's got some nice legs and wants to run. Okay. And remember, guys, we're going into power hour now. Okay. So a new hour, but it's a really, really, really important hour. It's the last hour of the entire Wall Street trading session. Okay. So momentum can completely switch. Like it's happened to me a million times where I'm in a nice sell and then all of a sudden the new 3 p.m. and boom, it's a green candle coming right through here. Okay. Could reverse everything. However, maybe what if power hour starts red and continue push down in our favor? Okay. It could happen. So let's figure it out in 60 seconds. But remember what I was saying. Can we get the volume close? Remember this point of interest. I'm more concerned about this green line. Okay, I see what we did there. We broke the low, we dropped all the way down, but can we continue to keep the volume staying red below this green line? That's more important than anything because we don't want buyers to push it up above that green line and go into power hour. They're going to start with that momentum and come up green. So we got to kind of set a precedent here that we're closing below this green line. Last 30 seconds to go. So whether I'm a 5-minute trader, 15, 30-minute trader, I'm always concentrating on the last 30 seconds. So I'll zoom in here a little bit. Okay, so we're coming back down. Good red volume. Okay, we're still below that green line, but here's the close, 10 seconds. Well, I wouldn't be surprised if they closed it right at that green line. Okay, here's the close. 2, 1, close right at the green line, just a tad bit below it. Did you see how it flashed green for a moment and they completely rejected it right away? Okay, so those buyers that were buying at the end of that bar kind of got trapped them, and let's see if the selling pressure can continue to squeeze those buyers going into power hour. Sometimes, we get candles in our favor. Okay, so this one is running, but look at the size of the wick. If this was a short wick and we had this momentum, we would have broke the wick and we would have been popping down. But right now, we are continuing to fill that wick, but it takes a lot of momentum to do that. And not only that, we got to break and continue dropping. So the size of the wick allows for buyers to come in and create a higher low. Like they can step in here, they can step in there, but let's see if the selling pressure can continue dropping. Okay, there was the first higher low. Did you see how it just wicked right off, higher low? Now it's coming back up, but we have a really nice volume above us. Okay, and it really opened red and just started pushing down. So we got to continue to come down while there's buyers. There's buyers buying right now. Continue to come down and make them think about their buys. And if you can break this, I guarantee you the buyers up here, their stop losses are right below here. If we can continue to draw, we're making them think of their trade. They could either be going in further drawdown, or we could be coming liquidating orders down here. So if we break below here, we're coming liquidating buyers. Buyers are losing. You and I, we're winning. We've got runners in the markets. Let our runners run. Let them continue to bank for us. Time to get those kids. I'm going to call them an Uber. I should call them an Uber. That's pretty bad. Pretty shitty parenting. If I call them an Uber and I sit here and trade, people are going to think no, I wouldn't do that. No, Ron is a good father. Okay, guys, look it, we broke. Okay, so we're breaking. I'm going to be off the call, guys, but if you guys can continue to monitor this, if we close with red volume below here, this entire big green zone, we might be able to flip it red, and maybe might have a further selling pressure today. Just look at, guys, what we did, what move we caught. Now reflect back on it. The big leg down. Okay, see how it came up right there? Double top, we waited for the second leg. We got closing volume below. There's our sell. It doesn't get any better than that, guys. Okay, we waited real patiently. How long has this call been? 4 hours plus. Okay, and then if it comes down to that yellow line, 6,000, that's a daily point of interest. You gotta understand that some shit's gonna happen down there. That's 20 points. That's 80 ticks down in there. Okay, if it continues to drop. However, if it closes, big green box red, continuing to go down, this thing might come back down. And then where's your big bottom, like for the day? Here's your big bottom down in here at the low of the day. Like that's where, holy shit, if we get a runner coming all the way down there, we're good. Okay, that's it, guys. I got to get out of here, but I hope you guys enjoyed today's call. We did something different on the 15 minutes. Grab some ticks and pips here. Hope everyone's happy. Guys, kindly leave us a like, subscribe to the channel. Our 80,000 subscribers winning a free lifetime membership with Dave and I at SST. Guys on Zoom, if you guys, Dave and I uploaded some education for you guys. I don't have time to show you guys, but go in the education. You're going to start to see the trade recaps are available for you. There's 4 or 5 videos breaking down our trade signals. Continue learning with that. And guys, I had a great call. I got a great call, but I got to remember I got to go grab some kids. So everyone, take it easy. Thanks for staying for 3, 4, 5 hours with me, guys. I appreciate it. And enjoy the rest of your evening. I'll see you guys tomorrow, 11 a.m. Guys, let's get started. I hope you guys enjoyed the little webinar we did at the start of the call on S&P 500. We broke it down exactly what we were trading today. Okay, and don't forget Wednesday after hours NVIDIA earnings. That's what the whole market is waiting for, including myself. Thank you, guys. Have a great weekend. God bless. We'll see you guys tomorrow.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.